embedded escalations inbuilt, so effectively they increase with inflation, so our revenue will benefit from inflation going forward, and then that then sets the new base for subsequent years. And given our business is quite a high margin business, around sort of 70%, bit more, we actually, the revenue benefit offsets the costs. We were also seeing some rising interest rates coming through, but we've got a very strong balance sheet with hedging in place and has been in place for some time on almost all our assets. So actually inflation for us, we've said, is we expect to be a net benefit into the near term.
You've said before that Transurban increasing tolls amid this pandemic was one of the most critical decisions for the company. Now that inflation seems to be roaring back in Australia, is there more focus now to maybe be a bit more sensitive to prices as consumers start to struggle with the cost of living?
And absolutely we're sensitive to our customers. When you look at the data, though, 80% of our customers spend $10 a week or less on tolls, and tolls make up less than 1% of the daily household spend. We put out some data today with a mobility report, and we asked about 5,000 customers what were the things, or 5,000 community people in the community, what were the things they're really concerned about, and there are a lot of prices growing way more than inflation at the moment, and they seem to be right up the list of concerns. Clearly there are some customers that will get themselves into difficult situations, and we've got a program we set up called Linked Assist that helps those customers through if a customer has a particularly difficult circumstance. And the other arrangement we have that we're seeing a real positive on with customers is we've got an arrangement with Viva Energy that gives customers a Linked Assist, so our account customers 4 cents a litre off their petrol prices as well. It's very much looking after our customers at this time.
It seems like your traffic volumes you mentioned are quite rosy, and you're back to sort of these pre-pandemic levels. Do you get a sense that maybe consumer patterns are changing, that maybe as the pandemic fears recede, that maybe there is that less aversion from the public to take public transport now? But then I take a look at something like workday traffic in Sydney that's declining this year. Is that also a sign of things to come?
Yeah, so customers use our roads for all sorts of reasons. Probably about 15% use it for commuting in and out of the city, and we've seen that increase clearly as government restrictions have relaxed a bit, but still not at prior levels, but we're getting more and more movement around the rest of the city. The other thing you see in our data is freight traffic has increased very significantly. It increased at the beginning of the pandemic, and it's held up very consistently ever since, because you've got trends like e-commerce. People now used to buying online and having goods received at home. So there's different drivers. We are actually seeing people driving more. So even if they're going to work a bit less, they may drive more and have less preference for catching public transport. So maybe the drivers are a little bit different, but yeah, all in all, we're seeing an increase in mobility.
I was going to ask you about emissions, because the government has a pretty ambitious target of 43% reduction by 2030 when it comes to greenhouse emissions. That means big cuts are underway. How is that going to impact your volumes?
So when I think about emissions specifically for our business, we were one of the first companies actually to sign up to science-based targets. We did that way back in 2013, and we've had a net zero commitment in 2050 for some time, and we're well on our way for achieving it. Customer emissions is an area that we're quite focused on. We actually think the shift to electric vehicles will be good for customers, and we're working with customers to help them see the benefits of that. The design of our roads is actually such that our roads are less carbon intensive in terms of customer use than the alternate road by about 30%. So customers use less fuel and have less emissions on our roads, just given the design of the roads.
Understood. Very quickly, Michelle, I guess as a final point, just help us understand what the business looks like these next 1 or 2 years. So 3.4 billion, that's Aussie obviously, top line for the entire 12 months that's passed. The forecast I have on my Bloomberg terminal from analysts is about 3.5 for this fiscal year, and that goes up to 3.7 for the year after that. Does that make sense to you, or is that too optimistic or too pessimistic from the street?
So I think what our investors are really keen on is what's going to happen to our security, so distributions per security from here. So in 2022, we announced a 12% increase, and we've given some guidance for 2023, which is around a 30% increase in distributions. Really three big drivers of that. One is the return to traffic and movement, as we've spoken about. Secondly, the benefits we see of inflation coming through our revenue, and thirdly, we've actually got a balance sheet that's really set up well, and we've invested in our business so that we are set up not only to deliver distributions into the near term, but to support the long-term growth of the business, which will drive distributions for decades to come in our business. So as I look at it, we go 30% growth in distributions into next year, which is a good outcome.
Yeah, strong balance sheet. And you know what? As CFO, thanks to you, right? Michelle, thank you so much. Michelle Jabko there, Chen Serban, CFO, joining us exclusively there out of Australia. Right, coming up, we're headed back, in fact, to Australia here. The primary exchange, the actual one that operates your financial securities exchange, stocks. Annual profit, higher revenue also here. Record capital raisings. Our exclusive debrief here with the managing director and CEO is just ahead. This is Bloomberg.
SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
No one covers the world like Bloomberg.
The says will get to 7% in the coming months. Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from?
We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
The state of play across your equity markets right now, mixed, mostly lower. Singapore just managing to hold the fort here, but obviously not enough from a sort of just influence perspective here. Let's turn our attention now to Australia here. The primary exchange reporting annual profits here increase nearly 6%. Plus, of course, you're also looking at higher operating revenue in a record year, also in terms of capital raisings there. Net profit coming in just 509 million. That's Aussie dollars. That's up from 480 from a year back. Let's get a sense of what the business looks like right now, what drove those numbers, and what will continue to drive these numbers ahead. Exclusively joining us today is the new CEO of ASX, Helen Lofthouse. It's almost unfair, Helen, for me to start asking you about the year that passed because you just joined, of course, in your new position. But why don't you give it a go? Why do you think the business did so well?
Thank you, and thank you for having me here today. So I was really delighted to be presenting such a strong result. As you say, I've been a couple of weeks in the seat, but I've been here at ASX for 7 years. We're really delighted by the result, record revenue, record EBIT, and maintaining our 90% dividend payout ratio for investors. I think in terms of why it was such a strong result, it really talks to the overall strength of ASX's business. We're actually a very diverse business. We have four different business lines and a number of different revenue streams within them. And we saw a very strong year this year for listings, and as you mentioned, record capital raising and strong annual listing fees as well. So ASX continues to be a really attractive place for listings and for people to raise capital. And we also saw equity market strength. So equity markets have been attractive for both issuers and investors throughout the year. We saw volatility increase during the second half of the financial year, but again, that was still strong for equity markets here as we saw people managing their risks around that. And I think the nice thing is that the equity market strength actually leads into growth across a number of our business lines. So we saw good, I think our cash market was up 15%. We saw growth in our equity options and equity index futures, but also saw that growth then filter through to clearing and settlements in our securities and payments business, and demand for data and technology products in our technology and data business. So overall, a really balanced result that was widespread across ASX's business lines.
And I guess, Helen, if there was a curse to having such a good year, is really just you being able to then surpass that for this fiscal year. Do you think those conditions persist this year?
Oh, I certainly think there are changes in outlook, and we've seen the IPO market soften quite a lot already. But I think the good news for a business like ASX is we are quite a diverse business, and things change. But with the change in inflation outlook and rising interest rates, we're seeing some strength come back into the short end initially of our futures market, some strength in OTC clearing. I expect to see that in due course lift in terms of our interest income as well. So I think the IPO market is likely to slow down, but we'll see some hopefully some positive impacts flow through into other areas of the business this year.
And Helen, I know you're new to the job, but investors are certainly wondering if you could give us any updates on the CHESS replacement. Why the holdup? What's causing these delays, and what do you plan to do about it?
Sure, and we put out a market announcement a couple of weeks ago on this, so I'll just reiterate the key points from there. We did announce that we've commissioned an independent review into certain aspects of the CHESS replacement project, and more specifically, it's some challenges we're having with just certain aspects of the application software, where we're really having some challenges in terms of the resilience and the stability requirements that we have for the market. Bear in mind that this software is going in and will need to service the market for some time to come, so we're really looking to make sure that we've got that resilience in place for the future. We've paused to do a review because we had some unexpectedly long timelines in terms of addressing those software issues. So we're really digging in and going, well, what are those issues? What are the proposed solutions? And trying to get some real confidence on the timeline so that we can, that's one of the key inputs into us doing replanning on the timeline, along with all of the input that we're getting from our customers. And look, I'm really disappointed. This is the third delay to the go live date for CHESS. I know our customers are disappointed. But I think we are all in agreement that this is a critical platform for Australia. It underpins the Australian equity market, and it has to be right. It needs to go live safely. And I think the other thing I would highlight is our existing CHESS platform is still working well, continues to be secure and resilient. We've done a lot of investment in the existing CHESS platform around its capacity and resilience, and we're confident that that remains robust for the extended period.
I was going to ask about the outages as well. I mean, AXS has faced several, although there's been a drop in these incidents. But what can the company do to avoid this moving forward?
Yeah, and certainly incidence is a key measure that we look at to assess, it's one of the factors that we look at in terms of our technology investments. I think today I did talk about the fact that we've seen incidents drop by 75%. That's customer-facing incidents by 75% over the last 2 years. So, overall that's a good metric. Sometimes when you change systems, of course, you are introducing some risk there as well. But the bigger risk really is to do nothing. And certainly our continued program in technology renewal is going to be an important ongoing feature of our strategy. You've seen that consistently so far. We'll carry on with that. We think that it's really important to be investing in having contemporary, flexible technology to underpin the Australian and New Zealand financial markets. So that's something you'll continue to see us doing. And we'll absolutely be continuing to monitor incidents as one of the things that gives us a sense of how that's going.
All right, thanks so much for joining us. Helen Lofthouse, the ASX CEO, joining us on the back of those earnings. Thank you so much. This is Bloomberg.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
บริการออกแบบและติดตั้งวิดีโอคอนเฟอเรนซ์โดยผู้เชี่ยวชาญ Smart Solution Computer
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
What is your base case for Italy in terms of what happens politically and then what the economic fallout is?
Yeah, sorry about that. Dry throat, need a bit of water. If I could just get that, please, from my floor managers. Anyway, let's get it back to markets. Doing this, let's get an update of your latest business flash headlines right now. And we're looking at Country Garden, the biggest builder in China. Out with some earnings here. First half core profit to be around $665 million. It's down as much as 70% from a year back here. Net income is seen between $30 and $148 million. So quite wide in the guidance here. Now, Country Garden citing this tough business environment due to the COVID outbreaks, the obvious downturn in the property market, and also some foreign exchange losses. Staying on earnings here, the Hong Kong Exchange posted its fifth straight drop in profits here, with second quarter net income plunging 22%. Yet tight COVID rules have limited business travel, while more mainland Chinese firms have sought to list their shares on rival exchanges overseas. Now, speaking exclusively to Bloomberg, the CEO Gu Guzin says that he's confident of a pickup in IPOs next year, with about 180 applications filed.
I feel confident given the number of IPOs that we have in the pipeline. We've had 16 IPOs in July. I mean, so very good performance. Now we had all those IPOs and the pipeline still around 180. So the pipeline was replenished.
Bloomberg has learned Apple is aiming to launch its latest iPhone line on September 7th in a virtual event. Now, other products expected this season include new Macs, low-end and high-end iPads, and also 3 Apple Watch models. New iPhones usually hit the shelves about a week and a half after they are unveiled, and Apple has declined to comment on the event's timing. Now, Target here, the company posting second quarter profit that really badly missed estimates here. Still, though, the discount retailer is sticking with its forecast of a dramatic rebound in the second quarter. The earnings plunge reflects moves here to slash inventories of discretionary items to pivot to essentials. That's, of course, as soaring inflation in Vaughan forces shoppers to pay more for groceries. Vaughan.
Yep, the retail sector, of course, in the U.S. in focus here. The headline was flat, but certainly if you take out inflation, things were looking a little bit better, hence why we saw yields picking up across the U.S. We're petering off that now. It's really about China once again when you have the likes of Goldman Sachs, Nomura downgrading their outlooks for growth once again. 2.8% for Nomura, 3% for Goldman Sachs. We're going to get Hui Shan behind that call once again to downgrade growth in China. But you see risk assets are falling. Dollars getting a little bit firmer here this morning. And as we, of course, we count down to the BSP decision, we just had Sri Lanka keeping those rates unchanged. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus.
You will put a woman on Mars. You will bring forth global cooling. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city, it's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It's the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
Yes, it's about renewables.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
We were thinking big from the beginning. I mean, the reason that I was interested in doing this in the first place was a much bigger challenge than making a comfortable shoe or doing something in the fashion industry as a narrow opportunity. We thought that there was a big leadership opportunity. We looked around at an industry where there was 20 billion pairs of sneakers made every single year. and it was 100% made from plastic and the hides from cows, and it was terrible for the environment. And we thought that we could offer something to consumers that was differentiated in the way it feels, more comfortable, higher performance, and do that because we use sustainable materials. And in doing so, we could take a really interesting leadership opportunity and grab that and use that to tell a totally different story and compete on a totally different vector than what the rest in the industry were doing.
The difference between political gossip and policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influence in Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, it is a date. Apple's next big product unveiling is set for September 7th, according to Bloomberg sources. Details on the new Macs, iPads, and of course iPhones, we will see. Plus, Meta rolls out its old playbook for a new round of midterm elections. We'll talk about whether it's enough to fight the latest trends in mis- and disinformation. And ARM just posted record revenue and shipments, but its chip industry peers are seeing a slowdown ahead. I'll ask CEO Rene Haas if he shares that sentiment. We will get to all of that in a moment, but first I want to get a look at the markets. U.S. stocks falling for the first time in 4 days. Bloomberg's Christina Aquino here to paint the picture. Christine?
Well, Emily, it is Fed Minutes Day today, and we got another reminder that more rate hikes are coming. You know what that means. Higher yields and bad news for tech. Let's take a look at the broad tech sector today. Both the NASDAQ 100 and the FANG indexes falling for a second straight day, also falling more than 1%. It's been about a week since we saw declines of that magnitude, and we're definitely seeing a bit of asset rotation here. We're hearing from investors that they're preparing to load up on treasuries as they're getting to these cheaper levels, and that usually happens at the expense of these high valuation tech stocks. Of course, all that also weighing on chips today. Take a look at the Philadelphia Semiconductor Index extending its 2-day decline to about 3.5%. And you know, before the Fed minutes, we also got some bad news out of China earlier this week, and that's definitely taking a double whammy toll on this index, now down about 25% year to date. Let's take a look at some interesting corporate stories today. We have quite a few. Bed Bath & Beyond, of course, continuing its retail-fueled surge, and that trade is really back with a vengeance here. But I actually want to turn our attention to another stock on this board. It is the Manchester United stock here, which is rallying quite a bit today. And Emily, if you're wondering, what does that have to do with tech? It is by way of Elon Musk, who earlier tweeted about potentially buying this English football club, but then hours later clarified that it was just a joke. Still a nice blip higher for the stock, though. It finished the day higher by nearly 7%, Emily.
Just a joke indeed. Another one. Okay, Christine, thank you for that. Meantime, a number of high-profile venture capitalists and entrepreneurs are meeting in Los Angeles for LA Tech Week. It includes names like Mark Andreessen, Ari Emanuel. For a better sense of the sentiment there, I want to bring in Zillow co-founder and 75 & Sunny general partner Spencer Raskoff, who's also a speaker at LA Tech Week this week. Spencer, if we were to take the temperature of the markets, it is anything but 75 and sunny. What's the temperature in LA? The market temperature.
It's hot.
Yeah, it's hot. We're not gonna let a week, couple days, or couple months in the stock market damper the enthusiasm for tech here in Los Angeles. It's a really exciting time. This conference this week, you know, it was kind of an unconference because we just sort of announced it to the community just a couple months ago, and now we have over 300 events and 16,000 people, many of whom have come from other areas, including the Bay Area, exploring LA tech, filled with enthusiasm and excitement, and it's a boom time here.
You know, tech hubs have been changing. Obviously, we've been talking about the movement away from Silicon Valley, but now with more distributed work, more remote work, what is the power of the LA Tech Hub in particular?
So LA is the intersection of media, entertainment, pop culture, commerce. It's where tastemakers live. So, you know, the 10,000, 20,000 people that decide what's cool for the rest of the country, the rest of the world, they live in LA. This is where culture happens. And now you have this convergence of media through streaming and studios, which really are tech companies increasingly. So the you know, media, entertainment, and pop culture is very strong in tech community here, but it should be remembered that LA also has a 50-year manufacturing history in aerospace, in heavy equipment manufacturing, technology, incredible universities, and it has now cemented itself as the #2 tech hub behind the Bay Area. Our goal, my goal, the LA tech community's goal, Emily, is to get you someday to move your show from the Bay Area to here in LA and have the intro of your show talk about how LA is the tech center of the country and hopefully the world.
It's a wonderful idea, Spencer, and I can't say we haven't thought about it. So you will be my first phone call when that happens. But you know, look, it's dreary. There's a lot of red on the screen when you look at the markets almost every day. How is this impacting your strategy?
Yeah, so look, we are in the midst of a venture winter, there's no doubt. So venture firms have pulled back. Late stage growth investors, the hedge funds, the crossover investors that were leading all of these high price Series D, Series E, Series F rounds, they've moved out of privates. They're either hiding under their desk or they're focused on the public markets right now. So that chill has moved upstream to the earlier stage companies. And companies are adjusting. Companies are doing inside rounds, they're doing flat rounds, they're cutting back on marketing expense, they're cutting headcount. And they're adjusting for this new winter. And you know, I'm old enough now to have been through several cycles, 2008, 2001. Great companies can get created during these down cycles. They just have to make sure that they survive. And customer behavior changes, corporation behavior changes during these period of change and during recession. So a lot of great companies, a lot of great things come out of them, but you're absolutely seeing companies adjust and venture capital investors adjust.
Now, I know Andreessen Horowitz has a big presence down there, and they are the target of a lot of chatter in Silicon Valley right now. Mark Andreessen writing the firm's biggest check ever to Adam Neumann, the founder of WeWork. Some people pretty unhappy about this, and we spoke to a young founder, Allison Byers, yesterday, and I want you to take a listen to what she had to say.
You have to feel that rage when you are part of that community that is just historically blocked from accessing this funding. What is a major prestigious investment house doing backing fraud a second time? There is no excuse for that. And there has to be the ability to separate what is a good business idea that has the potential to be a good investment from the person who is behind that idea and executing on it.
Spencer, I'm just going to leave it open-ended. What's your take?
Yeah. Well, there's a lot of commentary and discussion this week at LA Tech Week about this exact topic. You know, my take is I was very surprised by the size of the check. I mean, $350 million for a seed round, that's ginormous by any standards. I don't know Adam Neumann. I suspect that the team at Andreessen Horowitz had a hard look in the eye with him and said, have you been humbled? Are you now coachable? Did you learn from the mistakes that you made? And they looked past those mistakes and said, here is somebody who has revolutionized a huge category, commercial real estate, and who has created a very large, successful publicly traded company, which was a roller coaster. It went up, it went down, but you know what? It's still a $5 to $10 billion public company today. And I suspect that he convinced Andreessen Horowitz that he learned from his excesses and from his mistakes. Now, the commentary from that founder is absolutely right. It speaks to the fact that there is still a lack of diversity, equity, inclusion. I mean, Emily, you literally wrote the book on this, right? And this is still a serious issue in tech. And so she's right to express outrage from her perspective about it. But I think that's what Andreessen Horowitz is thinking when they decided to back Adam Neumann again, which is that he'll have learned from his mistakes and and be a different type of founder and a different type of leader this second time.
You know, it does speak to a pattern, as you say, that we have seen in Silicon Valley time and again. I'm curious what you think of his idea as someone who also founded a company in real estate. Is his idea, Flow, this idea to revolutionize residential real estate, apartments, does it seem
think it's a pretty
that
clever
visionary
idea,
to you?
Emily. Yeah, I think it's interesting. I mean, for viewers that don't know, he's trying to create a branded multifamily product. So think like what W Hotels is to hospitality, this company, Flow, could be to apartments. And it is a good insight that most apartment buildings are unbranded. They're just named the address. And it is kind of an uninteresting experience. You just take the elevator up to your little box and that's that. So he's trying to create, WeWork for apartment living. I think that's a good idea. What I don't know is if the margins of managing a multifamily apartment building can support the accoutrements that he needs to build to create that community. I was talking to an investor last night who's much more experienced in multifamily real estate investing than I am. And this person was very bearish on the idea, said it'll never work. There's not enough margin in managing multifamily apartment buildings to create what he's trying to build, both a brand and also other advantages to the tenants. And so this investor was very negative on it. I haven't, I'm not close enough to have a personal opinion about it. But as a user, as a tenant, as a homeowner, I would agree that there does seem to be there. I think it is solving a problem that renters have.
Well, you and I could go on and on about this for hours, but we can do that offline, Spencer. I do want to get your take on the market dynamics, the housing market dynamics. Do you think that the downturn that we're going through will delay innovation in the housing industry? The hope, which is what you were trying to do with Zillow, is make transactions easier for home buyers. And will all of this tumult put that off?
Potentially, because what's happening is the downturn in housing is scaring venture capital investors from putting money to work in the category. So, 75 and Sunny, my venture firm, has about 100 investments, about a quarter of which are in prop tech. And so I'm a very active prop tech investor, and I can tell you that VCs are really put off and scared because the public comps have come down so much. I mean, Zillow is at a 7, 8, 9 year low, and all the other public comps have come down so much, and that weighs on investor mindset and sentiment. So yes, it could dampen innovation because there will be fewer startups in prop tech getting funded. Now the good news is, if you are a prop tech like Picasso, one of my other companies, that is funded, that has raised a lot of venture capital, that already has a product in the market, this is a great time to gobble up market share because competitors probably won't be able to get funded. So, again, like I've seen in other cycles in 2008, for example, where Zillow actually benefited from the 2008 recession because they were already funded and on the racetrack and others couldn't get funding, great companies can be built during this down cycle.
Last quick question about SPACs. You were part of the SPAC Gold Rush, Chamath Palihapitiya as well. Your SPAC OfferPad, I don't think it's probably not where you want it to be, and we've seen a number of SPAC cancellations. Was this whole SPAC thing just too good to be true, or does it reemerge in a better market?
So I did 2 SPACs. One merged with Rigetti Computing and one merged with OfferPad. And you're right, neither of them are trading where I would like them to trade. One's at 5 and one's at 2. So there's a long way to go for those companies to live up to their full potential. the SPAC craze is over. I think that investor sentiment has soured on the product, and I still think there's a place for that product. And in particular, if a private company wants to get public right now, a SPAC merger is really the only way to do it, because the regular IPO process is totally shut right now. So there is still a role for SPACs, but it's a much smaller role than there was a couple years ago, when the advantages of the SPAC path were more clear relative to a traditional IPO.
All right, Spencer Raskoff, I'm going to let you get back to your very hot 75 and sunny weather over there. Thank you, as always, for stopping by. Okay, coming up, Apple's brand new iPhone coming up this September. That and much more. All the details, what we know about September 7th. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Watch Bloomberg Surveillance Early Edition for the news you need when you need it.
I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London.
Australia's central bank raises interest rates twice as much as forecast.
Then surveillance for in-depth analysis.
Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro, the RBA front and centre.
How does Japan get away with not raising rates?
Can it sustain its normal at a time when everybody else is facing a very different reality?
Bloomberg Surveillance. Be informed. Be prepared. Be ahead of the game.
Apple is kicking off a busy fall product season September 7th with new iPhones, new Macs, low and high-end iPads, and 3 models of the Apple Watch. The event will only be streamed online. Let's get more on this with Bloomberg's Mark Gurman, who covers all things Apple for us. So what do we know?
So I know that the event is currently being planned for Wednesday, September 7th. A little rare for Apple. They usually like to hold their events on a Tuesday, but as you know, Labor Day is on that Monday, so they're, blocking off that Tuesday as a travel day. Now, what does that mean to me? That means that not only is it going to be streamed online, but they'll have an in-person portion, probably for press and others, for a little bit of a hands-on. We're probably about 2 weeks away from this event being announced. In all likelihood, the center of the event will be the iPhone 14 line, along with the Apple Watch Series 8 line. So looking forward to both of those products and seeing what's in store.
When will these products be available?
So you'll see Apple do an initial launch wave on September 16th. That's a Friday, 9 days after the announcement. And that is probably going to be for the iPhone 14 line. You'll see 4 models, right? You'll see entry-level versions of the 14 as well as iPhone 14 Pro models. Now, the big thing this year is that the Mini is going away. So there won't be an iPhone 14 Mini. Instead, there'll be an iPhone 14 Max. That means there's going to be a 6.7-inch version of the non-Pro phone for the first time. It'll be a little bit pricier than normal for the non-Pro phones, but I think it will be especially popular because of that enhanced screen size.
Now, obviously, we've been talking a lot about inflation, consumers under pressure, difficult market dynamics. Is now the right time for Apple to be updating its flagship product?
Yeah, absolutely, right? Apple updates its iPhone every September, October, fall. They've done that since shifting their release schedule back in 2011. There is no way Apple is not going to update their devices. The people who are able to buy them are going to buy them. As usual, you'll see a lot of new trade-in deals. I think I mentioned this on the show last year. So I had the iPhone 12 from 2020. I was actually able to get the iPhone 13 not only for free, but I think I got about $75, cash in my pocket extra for trading in, right? So if they have aggressive trade-in deals like they did last year, I think they're going to shake out pretty fine.
You also had a story out today on Netflix, some more details about their ad-supported plan, what will be included, what won't be included. What do we know?
Yeah, so investors and consumers of Netflix have been pretty interested in this ad-supported tier. For those unfamiliar, right now, Netflix could cost upwards of $20 a month for their top-tier 4K plan with multiple screens, right? They want a cheaper option. The way to go cheaper is to add ads, right? And so it's going to cost less, and they're going to offset that with advertisements. And what we learned today, based on code findings inside of the Netflix iPhone app, is not only are they underway on revamping their app to support this ad-supported tier, but we know that they're not going to support downloads for offline viewing. Super popular feature. I've used it before. If you're hopping on a plane, you want to download some Netflix movies and shows to watch on your cross-country flight, you want that feature, this won't have it.
Okay, good to know. Thanks, Mark, for your great reporting. As always, Bloomberg's Mark Gurman. Okay, coming up, midterm elections are just a few weeks away. Is social media ready? Have companies learned from their mistakes? We'll discuss. This is Bloomberg.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Back in 1997, I was interested in the following question, which is, there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long, skinny necks. So Apatosaurus is an example. They also had really long, skinny tails. So I made a computer model that showed that, in fact, the tail of these sauropod dinosaurs could actually act like a whip, a bullwhip. Now, the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound. Okay. And that crack is a sonic boom. Yep. I think the way they got a date was to impress the females by making loud booms.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question. That's going to be the best question I get all night. I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Well, with midterm elections approaching, Meta is rolling out its plan to tackle misinformation. After years of revising and updating its election strategy, the social media giant is sticking with some familiar tactics, the same tactics we saw in the 2020 general election, which was marred by conspiracies and culminated in the January 6th insurrection at the U.S. Capitol. Bloomberg's Alex Barinka covers social media for us. So, Alex, talk to us about what Meta is planning to do here and what, if anything, is different from 2020.
Yeah, so they're very much focused, like you said, on misinformation. So they will remove posts and ads that have to do with things like wrong logistics on voting, things that incite violence based on the outcome of an election, and also, making sure that in the week prior to the close of the polls, they will not actually add any new political advertisements or allow any changes to political advertisements. The reason that will give a sufficient time for folks to kind of process and potentially fact check if there's any misinformation on the platform. So for them, bottom line is misinformation, logistics is the focus.
The question is it going to work? Are they any more prepared than they were in 2020 for tactics that will surely have evolved?
So we had the opportunity to chat to their top policy boss, Nick Clegg, and he says, look, we've spent the last 6 years kind of evolving the taxes we have. We feel good about what we had in 2020. We've made some iterations, but he insists that the company will not be complacent. He also said that they're sure they'll see some new things that they need to combat this year. So will it work? Well, if the goal is to remove misinformation from the platform and kind of stay ahead of things, I expect it'll still kind of be this game of whack-a-mole where you see bad actors putting out information, it needs to be taken down, they might change the language, it needs to be taken down, which would be, as the tune is for this year, pretty consistent with what we saw in 2020.
And how does what Facebook is planning to do, Meta, I should say, compare to, for example, TikTok?
So Meta is kind of unique compared to TikTok and, say, Twitter in that they do actually allow political advertisements. TikTok and Twitter both don't allow political ads on the platform. So Meta also has this unique stance that they won't fact-check ads. That's been a bit of a controversial stance for them. So that is kind of the main difference there. When you look at something like TikTok, TikTok will also vet organic posts since they don't allow those ads, and basically suppress things that are unverified from the platform. So fact checkers will allow good information, the information they deem good to go through on TikTok to the For You page. Bad information will be taken down. Anything that's not verified will be suppressed from that all-important For You feed, that main kind of feed where people discover things. So, that is probably the biggest difference here is that lever of suppression, let's say, that TikTok has to make sure that information that's not fully verified or they can't say one way or another doesn't necessarily garner as big of an audience as a piece of content normally could.
Well, and it's hard enough in English. How are they thinking about handling these issues in other languages, say Russian?
So Meta didn't talk a lot about Russian language this go-round. What they did talk about was adding additional Spanish language fact checkers. They have about 10 fact checkers they're working with. Half of those are Spanish because what they saw in the 2020 general election was a lot of news and commentary was in Spanish, and so they felt they needed to add some external partners who kind of focus on that language as well. So no mention of Russian, Emily, for the U.S. audience, but they are at least adding that additional language there for this election.
Okay, Alex Barenka, as always, appreciate you stopping by. Thank you. All right, coming up, a conversation with ARM CEO Renee Haas about chips and IPOs. He joins me next. This is Bloomberg.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
Hydrogen has a very special place in the universe. It's the first element on the periodic table. It is the most abundant element in the universe. And when clean energy advocates think about what can we find which would be as easy to use as fossil fuels, they think about hydrogen. The fuel that will, when burned, only produce water.
We like to imagine that if we just built enough of these and these, we could ditch fossil fuels and save the planet. Unfortunately, it's not that simple. There are some things where you just need good old-fashioned combustible fuel. Now startups around the world are betting that hydrogen can become the fuel of the 21st century.
The top names at the Fed are on Bloomberg.
I have a baseline case going into September that is 50 basis points. That's where I've been since the last meeting. But I have an open mind about whether 75 is going to be necessary. 50, 75 doesn't just depend on a data point, even an important one like the CPI. I like to say that we're data dependent, we're not data point dependent.
Nobody covers the Fed like Bloomberg, your global business authority.
Due to the macroeconomic uncertainties, as well as due to high levels of inventories that customers have built across various end market segments for us, those inventories are being adjusted down, and that is what is resulting in reduced demand for us.
That was Micron CEO Sanjay Mehrotra earlier this month. The slowdown in semiconductor demand was tough to find, though, in ARM's latest earnings report. The chipmaker reported record first quarter revenue and shipments as its diversification into cars and infrastructure starts to pay off. Here to discuss, ARM CEO Rene Haas. So we've been hearing from a lot of chipmakers that demand is going to slow down, their numbers haven't been good. How is it that ARM bucked the trend?
Well, Q1 was good for us. We were very fortunate. We had record revenue for us in Q1. We had record royalties for us, over $400 million in royalties. We had never done anything close to that before. So it's quite good. I think for us, Emily, largely it's been the result of the diversification of our business. As you mentioned, ARM was largely known for smartphones a number of years ago, but now we're in the cloud, we're in networking equipment, we're in industrial, we're in IoT, automotive. All those markets have been strong, so the result is a really good quarter for us.
Are you seeing any signs of a slowdown?
We're seeing some, but largely speaking, areas like automotive, areas like the cloud, areas like networking, still really, really strong. We've seen some slowdown in smartphones, some in PCs. We personally have not been impacted by it that much because we're seeing more and more ARM compute in each of these devices. So as a result, our results have been really, really strong.
So what does this show investors about the company as you're getting ready to go public?
Not much I can say about that process, but the results I think speak for itself in terms of how well we're doing.
So There have been a number of announcements about ARM getting into the data center. AWS is obviously leading the way. What kind of progress are you making there, and what kind of market share do you think ARM could potentially get to?
We're growing. I wouldn't want to speculate to how large our market share can get, but some of the fundamentals that we bring are really important, and that's really around efficiency. When you build a new data center, you only have so much power you can put in the data center, and you have only so much square footage. So compute performance matters, but compute efficiency really matters. It's an area that's really ARM's DNA. It's an area that we're really, really good at, and we're seeing that really in terms of the benefits of what AWS is doing and other partners. We had announcements from Microsoft, Google, all the major hyperscalers now have made announcements on ARM.
You've also, I know, been working hard to grow PC market share. Obviously, Apple has helped there. What about Windows? When are we going to see a big Windows breakthrough?
I think you're seeing more and more of it. The laptops today that are based on ARM are terrific in terms of battery life. They're terrific in terms of performance. They don't need fans. I think you'll see the Windows ecosystem moving to ARM in a big way pretty soon.
So, chip stocks, the market has not been kind to them this year. What's your sort of outlook? What will, in your view, differentiate ARM from the pack?
Yeah, I can't predict what the stock market's going to do. Obviously, if I was, I'd probably be on one of your earlier shows with a different job. We have two pieces to our business. We have a royalty business, which is an indicator of units that ship, but we also have a licensing business, which is really about design wins, the canary in the coal mine relative to new design starts. That's really strong, and in fact, it's as strong as it's ever been. We're seeing a lot of investment in R&D in automotive, in the cloud, in IoT, in laptops and smartphones. So I think going forward, the secular trends that have driven a lot of growth, we're very, very bullish on that. And we're seeing, again, our licensing activity, which is an indicator really of investment in R&D, has never been better.
Now, I know you can't talk specifically about the IPO, but what has the volatility meant for your strategy and your plans? I mean, you have to be watching the market dynamics and wondering if now is really the right time. I mean, many people are saying the IPO window is closed right now.
Yeah, I can't speak about the IPO process, but what I can tell you is that there's been a lot of semiconductor downturns in history. Obviously, we all know that. What's different about this one is we're not seeing people tap the brakes relative to new investment, and we're not seeing people tap the brakes on R&D. For us, the licenses that we do today, they end up in products 3 or 4 years down the road. The royalties that we're seeing today as a result of design wins that we did 3 or 4 years ago, we see continued strong demand for our technology and products.
Let's talk about China. Continuing tensions in U.S.-China relations, more restrictions from the U.S. side about doing business in China. We've seen, with the ARM example, just how difficult it is to run a joint venture there. How are you navigating that? Given the unique, ARM's in a very unique geographic and sort of geopolitical position, how do you navigate that without upsetting Washington and Beijing?
We're in a unique space. So when the U.S., for example, puts down restrictions around entities or companies that can't be shipped to that require licenses, like any other company, we have to apply for a license. We'll adhere to the compliance rules. We're a little different than traditional U.S. companies because ultimately those rules come down to the nature of the U.S. content, i.e. the percentage of U.S. engineers working on the products. The majority of ARM's engineers are not in the United States. The majority of them are in Europe, mostly in the UK. So we are generally not as impacted as other companies around these areas. But of course, when we need to comply, we will. And when we have to apply for a license, we'll do what other companies do.
What's your view on the supply chain right now and how the COVID restrictions in China will continue to impact supply?
I think it's a very hard thing to predict, to be honest with you, because the shutdowns are sudden. They don't come with much warning. It doesn't take a whole lot for a section of the country to shut down, and the next thing you know, you can't get a port open, you can't ship product. So I think the supply chain perturbations are with us for a while. The world was very accustomed to the old normal. The world was flat. We had no pandemic. There were no skirmishes or conflicts across borders. We live in a different time now, unfortunately, and I think you're seeing that manifest itself in terms of all kinds of shortages. I think it'll exist for a while, personally.
So what have you changed about the way you do business, the way you run the business to navigate that, to get around that, or can you?
Hard for us. We don't build products, as you know. We license IP, so we ship blueprints to companies who build chips.
But what about your customers?
We watch that very closely, right? We want to make sure that we can supply the products they need at the time they need to have them to ship. But ultimately, we're kind of beholden to what the supply chain looks like. Again, what we continue to see, though, is people doing more and more designs starts, not slowing them down. We're not seeing anyone say, look, I'll push a product out by 6 months because I'm sitting on inventory. Our partners don't think that way. It's really about innovating as fast as possible because the demand cycle is so strong.
Well, there is concern, though, that that demand cycle doesn't keep up. But, demand aside, is supply, are we still going to continue to see supply issues? And how long do those supply issues last?
I think we will see it for a while until the world gets to a new normal of understanding what the buying patterns are, what the forecasting patterns are. Let's take, system on chip, for example. You may be able to get enough die from TSMC, but if you can't get the substrate that you're going to put the system on package, you're going to have a problem. So I personally think it's with us for a while.
So where is ARM, let's say, a year from now?
Hopefully I'm with you talking about record revenues, record royalties, record design wins. I'm hoping that the momentum continues. I'm confident that it will.
And will you be public?
I can't say.
I should try one more time. Okay. ARM CEO Renee Haas, good to have you back. Thank you for stopping by. Okay, coming up, Coin Funds, a brand new Web3 venture fund. We're going to talk about where they're placing their bets with managing partner David Pakman next. This is Bloomberg.
SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
We were thinking big from the beginning. I mean, the reason that I was interested in doing this in the first place was a much bigger challenge than making a comfortable shoe or doing something in the fashion industry as a narrow opportunity. We thought that there was a big leadership opportunity. We looked around at an industry where there was 20 billion pairs of sneakers made every single year, and it was 100% made from plastic and the hides from cows, and it was terrible for the environment. And we thought that we could offer something to consumers that was differentiated in the way it feels, more comfortable, higher performance, and do that because we use sustainable materials. And in doing so, we could take a really interesting leadership opportunity and grab that and use that to tell a totally different story and compete on a totally different vector than what the rest in the industry were doing.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Time now for our crypto report, and even though the market might not be as bullish as it was last year, Coin Fund is announcing the launch of a $300 million early-stage Web3 venture fund called Coin Fund Ventures, and it's backed by institutional investors, family offices, and crypto-native founders. I want to bring in David Pakman, managing partner and head of venture investing at Coin Fund now for more. So, David, we've been talking about how there's a lot of dry powder out there with the market downturn. You know, a lot of investors right now having to sit on the sidelines. Why launch this now?
Well, this is not our first bear market in crypto. It's our third one. CoinFund's a firm that's been investing in crypto since 2015. And we launched our second seed fund in the depths of the 2018 bear market. That fund's done really well. So we have 3 seed funds, and now we're launching this venture fund focused on early stage, like Series A stage venture projects and companies. But in our view, this is probably the largest economic value creation opportunity we've ever seen in tech, bigger than Web 1, bigger than Web 2. You're rearranging the entire value stack of software. We're going to build software on top of decentralized blockchains. Crypto is going to eat the global financial system, and NFTs are going to completely rebuild the way we monetize intellectual property. That's a huge opportunity set. And so independent of where we are in market cycles, we think crypto is the best place to be making tech investments.
So what's your unique approach? Where and how do you plan to place your bets differently from all of that other dry powder out there?
I think first we have seen a retraction in the amount of crypto investors out there. There certainly are a group of crypto native investors like us who only invest in crypto and blockchains and all the technology around Web3. But many of the traditional venture firms and hedge funds that started digging into crypto have pulled back, leaving ample opportunity for us to make investments. We invest along the entire waterfront of crypto, everything from layer 1s and the blockchains themselves to the infrastructure stack built above them. We invest at the NFT and gaming layer, and we're investors in Dapper Labs, the creators of the NFT standard and one of the most successful NFT game crypto collectible companies. We invest in stable coins and payments and asset management and wallets and exchanges and really DeFi and all the different places where crypto is starting to see evidence of mainstream adoption. I think the differentiating factor between us and other investors is, first of all, we're crypto native. We only focus on crypto. And second, we have super deep technical depth. We audit the smart contracts of our portfolio companies. We help them architect the tokenomics. We're value added and helpful in helping people build companies.
You're on the board of Rarible, the largest NFT marketplace. You also co-founded the Apple Music Group back in 1995. And I'm curious what potential you see at the intersection of NFTs and music. There's so much kind of resentment in the music industry about, sort of others having the power rather than the artists themselves. Could this somehow resolve that tension?
For all of intellectual property, NFTs create a way to sell scarce assets, collectibles that can become more interesting or more rare or develop more attributes over time. That'll be true for music. It's been heavily true for pictures and videos, where we've sold more than $30 billion of NFTs in the 2 years since they've been created, making, I think, NFTs the most successful consumer product released since the invention of the smartphone. This is an overwhelmingly successful new product category. But for music, it's been small. We've not seen significant traction around music NFTs, but we will. Going back to before the internet, music was scarce. You could have only a certain number, a limited number of pressings of vinyl or rare merch items that people collected. But once music went digital, there's no scarcity anymore. A stream of music is ephemeral, and there's really nothing to collect. NFTs put the collectability back into intellectual property, and music will not be left in the cold here. I think artists, as you point out, are looking for ways to monetize their fan base and increase engagement, and I think they'll do that through NFTs, but it's early. I think there's only limited evidence of kind of music success anywhere near the scale of what we've seen elsewhere in NFTs.
Right. Still, a lot of people who listen to music don't know what crypto is, don't understand NFTs, but I wonder in the future, could crypto be the new platform or potentially a more valuable platform than TikTok or YouTube as a way to build and amplify a following?
The Web 2 business model is to sell attention, right? To pump videos and feeds and kind of keep people glued and monetize them through selling their data effectively to advertisers or targeting them with data-driven advertising. That's not a great model for content creators. Just don't make a lot of money from it. The Web 3 model is to create scarce limited edition digital collectibles that can be purchased and owned provably by your fans in any medium. And you can get much higher revenue per user. One of the most exciting things about NFTs are that the average NFT buyer spends between $300 and $900 per year on NFTs. That compares super favorably to people spend like $180 a year on Netflix or less than $60 a year on Spotify. So if people are willing to spend more for NFTs, for digital collectibles, then more of that can go to artists and creators. And I think that's a business model that most people who are creators will embrace.
So how do you see the music industry, let's say 10 years out? What will be different about it, and what will you have potentially invested in to maybe benefit from it?
So I think that, first of all, to build digital collectibles or any type of digital intellectual property, there's a lot of software that has to be built first. We call that in Web3, those software we call protocols. And so we're investing in a lot of the marketplaces and protocols on which NFTs are created and sold and tracked. Think of it as NFT infrastructure. There are examples of NFT products that have come to market that have been very successful that we've also invested in, like NBA Top Shot, which is a basketball collector's game created by Dapper Labs. And so I think our intention is to invest up and down the NFT stack, but it doesn't mean that we're buying NFTs ourselves. We actually have a portfolio company called Metaversal that does that. But I think one of the big questions for music is, will the artists release their own creative works digitally through NFTs themselves, or will they continue to give their rights or sell their rights to record labels and have those labels do it for them? If they choose the latter half, they will really maintain the status quo of the music industry value chain. But if they pull back their works and they monetize it themselves by selling them through very low-cost marketplaces to their fans, they can have more control over their careers, and also all creators can have more money.
Absolutely fascinating. Thank you for laying out a different view of the future. David Pakman, Coin Fund Managing Partner. Appreciate it.
Thanks for having me on.
All right. Coming up, Tencent is saying a report about its stake in Meituan is incorrect, but hasn't completely denied it. That story next. This is Bloomberg.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Tencent says a report that the company intends to sell all or much of its $24 billion stake in the food delivery company Meituan is incorrect. Bloomberg Crystal Z joins us now to explain. And Crystal, as I understand it, Tencent didn't actually deny the report. Help us make sense of this.
So, I mean, there are many reasons company deny a story, and the chief strategy officer came out and said that the story that Reuters put out yesterday is inaccurate. But if you think about the kind of strategy that Tencent has been working on since last year, they already disclosed their plans to divest their stake in JD. And overall in China, you're seeing that antitrust is becoming a bigger issue. So the Chinese government had flat out say that they don't want any one technology company to have too much influence in society. So it actually would thematically make a lot of sense for Tencent to divest their stake in Meituan. But we saw Meituan stock absolutely just tanked after the report came out. And now that their inaccurate statement or denial had gone out, it's actually come back up. So it's hard to speculate what's going on. We're following the story out of Asia, out of the US, but there could be more to the story behind.
If there is some truth here, if something like this happens, what would be the significance of that?
Yeah, so Chinese companies, as of 2 years ago, have not really had any antitrust concern. Basically, if you're a Chinese tech company, your strategy has been just to build, just to grow. And a lot of Tencent's investment has panned across all sectors in someone's life. You have your delivery, you have grocery, you have all of these instant messaging apps. So in terms of information, in terms of reach, Tencent has been really, really strong in tapping into all these sectors. But now you're seeing that it's taking a more Western approach. The government is saying that no one company can be that big. And it could really kick off a flurry of deals, and Tencent, Alibaba, those could be the first targets. So it's Alibaba, we have already seen, they've run into kind of scrutiny with the government, and it wouldn't be surprising if Tencent goes into the same direction.
How does the Chinese government's recent crackdown on tech, I mean, it's been happening over the last several years, play into this?
So we are seeing this play out in actually many ways. If you remember, the DD IPO is probably a really good example. The government told them, foreign listing is not the best option for you. It really manifests in many forms. It could be telling big tech company to divest their stake in other companies, or just retaining these control in China onshore instead of letting them raise capital elsewhere. So we have been seeing a lot less foreign listing. There hasn't been really any Chinese listing in the US after DD, and we've seen how a lot of, actually multiple Chinese companies that have US listed vehicle have announced delisting plans. So in many ways, the Chinese kind of capital markets has become more closed off, and as a country, they are really protecting their technology a lot more.
Obviously there's been a lot of volatility in US markets. Are we seeing the same thing in China markets when it comes to Chinese IPOs, Chinese listings? Is the window closed?
Yeah, if you look at Tencent and Meituan, those two stocks actually are down between 25 to 35% year to date. It sounds bad, but if you compare that to NASDAQ, S&P, or those tech companies in that same category in the US, those are probably down double or triple that. So the US capital markets is actually more closed off than, right now at least, more inactive. It's more inactive than the Hong Kong or the Shanghai capital markets. But that could change anytime. We're seeing follow-on market in the US come back. So if more of these follow-on block trades come back in the US, we could see IPO coming back as well.
All right, Crystal Z, thanks for that update. Appreciate it. And that does it for this edition of Bloomberg Technology. Coming up Thursday, we're going to hear from the co-founder of Ulu Ventures, Miriam Rivera, talking about her investment strategy and how it's changing in a recession. And don't forget to check out our podcast wherever you get your podcasts. I'm Emily Chang in San Francisco. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
So is there more pressure when you're trying to win a basketball championship than when you're trying to please investors? Where's the greater pressure?
Oh, I think it's definitely trying to win a championship. It's hard because a lot of, like when you invest, and you know this, when you're investing, you can control a lot more things. When, you know, on a basketball court, you can't control whether somebody's going to make a shot. You've got to get lucky.
And what's the greater pleasure, making 5 times your money on a distressed debt investment or winning the NBA championship?
They're both fabulous. I wish I could do one each year. That would be great. But I think there's a great feeling in being right on an investment, that you've done a tremendous amount of work and you've made money for your clients, which I think is great. I think winning a championship it's a very surreal feeling because there's a whole city or state that is actually behind you. You know, we had 70,000 people at the finals, and we had them all outside. You had 17,000 in the stands, and then literally like 60,000 people outside. And when we won, like just the joy that you had brought to the city was phenomenal.
Back in 1997, I was interested in the following question, which is, there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long, skinny necks. So Apatosaurus is an example. They also had really long, skinny tails. So I made a computer model that showed that, in fact, the tail of these sauropod dinosaurs could actually act like a whip, a bullwhip. Now, the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound.
Okay.
And that crack is a sonic boom.
Yeah.
I think the way they got a date was to impress the females by making loud booms.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Daybreak Middle East. Our top stories this morning. The latest FOMC minutes show Fed officials seeing the need to slow rate hikes at some point, with many participants concerned about over-tightening. OPEC's new chief says that oil markets are facing the high risk of a supply squeeze this year as demand remains resilient and spare production capacity dwindles.
I think we are running on thin ice, if I may use that term, because spare capacity is becoming scarce. And this is an issue. It's like an insurance policy. We don't want the oil markets to run on without insurance policy.
Egypt Central Bank governor resigns in a shock decision just hours before an interest rate meeting and with pressure mounting on the currency. And Bloomberg has learned that Apple is aiming to launch its latest iPhone line on September 7th in a virtual event. We'll have the details. It's gone 8 a.m. across the Emirates. I'm Yusuf Gamaluddin in Dubai. Stocks retrench after the Fed minutes. So what we're seeing is a lot of weakness in tech, but UBS, Global Wealth Management, flagging that clients shouldn't chase this rally. At the moment, we're called a little bit lower on the S&P 500 mini. They're arguing the speculation that a Fed pivot might be in play is premature. What happened over the past month in particular had a technical tailwind. Retail sales, also something to get your head around. JP Morgan, in the meantime, recommends staying bearish on the euro against the dollar. You're seeing the Bloomberg dollar index here getting a lift, likely to re-weaken. US 10s at 286 there, and then Brent crude just short of $94 a barrel. We had a bullish Energy Information Administration report that offsets some of the gloom on the demand side of the equation. I want to flip the board and get to this chart to show you how the Fed minutes kind of moved the dial somewhat. It wasn't earth-shattering by any stretch of the imagination, but nonetheless, two-year yields, we saw swap traders increasingly bet that the Fed is going to boost by 0.5 percentage point next month rather than 0.75 of a point. So this is your 75 bips chart, and you see how that comes down throughout the course of the afternoon. Morgan Stanley is now betting on 50 basis points. I want to get to a bit of a bizarre story, and that is around the Egyptian central bank governor who has offered his resignation. That's been accepted. But here's the problem. There is no new governor yet. There are two deputy governors, one of the most important positions in emerging markets. This was an opportunity for the government to step up on communication and credibility. It's been 15, 16 hours since we had a resignation. Why is there no new central bank governor hours ahead of an important central bank decision? There was no gap in the ministerial reshuffle over the weekend. Why do we have a gap this time around? This is what you're seeing on the Egyptian pound forwards. On a 3-month basis, you're seeing potentially 21 pounds against the dollar with depreciation in the vicinity of almost 25% over a 12-month horizon. We'll get back to this story later on in the program. Now let's check in on the markets in Asia. Juliet Saleh joins us for that from our Singapore studio. Jules.
Hey, Yusuf, what a choppy week it has been for Asian investors. We are down today again, and that really is on the back of this Goldman downgrade for China. So again, these growth concerns really weighing into investor sentiment. And of course, we're digesting those Fed minutes too. But really now the trajectory is looking forward to Jackson Hole. You've got significant weakness coming through in Japan, China, Hong Kong. We're also seeing these Asian semiconductor-related stocks dip following that warning from analog devices. And then when it comes to the Australian 3-year yield, it is rising a little after having an initial dip on that surprise jobs number for jobs report, I should say, for July. We saw almost 41,000 jobs lost in the economy in July versus an expected gain of 25,000. You do, though, have the unemployment rate now at 3.4, down from 3.5%, and that was mainly due to the participation rate. So fewer people looking for jobs due to COVID complications and, of course, the floods. But, of course, that fall in jobs in July really complicates the RBA's thinking for what size of rate hike they'll have next. And let's have a look at some of these downgrades that we've seen from China. Goldman Sachs now cutting their GDP forecast to 3% from 3.3%. They're citing weaker than expected economic data and also those near-term energy constraints. Nomura slashing their forecast to 2.8 from 3.3%. And Pictet told us they've actually slashed their 5-year outlook for China. So a long way from that ambitious 5.5% target that seems to have been ditched even by authorities as economists keep slashing their growth projections for China for this year. Yusuf.
Jules, thank you for that. That's Juliet Saleh there with some of the important market moves in Asia. I want to get to the minutes from the Federal Reserve's July meeting. Those have revealed concerns that central bank may need to start cooling off rate hikes, even as it made clear that it still needs to push further into restrictive territory. Our global economics and policy editor, Kathleen Hayes, joins us as always. Kathleen, I mean, I spent a good hour just going through the statement again and again. And it's quite hard to make a call on whether this was dovish or hawkish.
Absolutely. And good for you to actually read these minutes. You can get some headlines. You can get a few paragraph story from a news organization like Bloomberg. And of course, ours are always the best. And they sum him up very well. But I think when you really go through and you see a few members said this, a few participants or many participants said that, it's a discussion. It was a meeting. It lasts over 2 days. There's a lot in there. What the markets took away from from this, as you just said, basically, was that the Fed was dovish here. They said that as the stance of monetary policy tightened further, this is from the minutes, that's hiking rates, it likely would become appropriate at some point to slow the pace of policy rate increases. Now, just pause here for a moment, because several Fed bank presidents in the past few months have said this. 75 basis points, then maybe 50. They've opened the door at some point to 25 basis points. Mary Daly, when I spoke to her, president of the San Francisco Fed, said, my baseline is still 50. I'm open to more. This is not a done deal. But this is, so I don't even consider this very dovish for that matter. Now, this risk that the Fed might hike rates too much, get a problem there, that's also was considered fairly dovish, but there is caution all the way along here. You can see that the risk was tightening rates too much, so more than necessary to restore price stability. Okay, so that's a dovish case. But Bloomberg Economics, led by Elena Gillette, give us a piece here in New York today, writing that, look, what they talked about too was Fed officials acting with resolve, that's with quotation marks, to bring down inflation. They know they have to get to a more restrictive stance. Ongoing rate hikes are appropriate. And remember, at the meeting, with Jay, and Jay Powell reflects this, the meeting reflects it when he said, you want to know where we're going? Look at the dots from June. What those dots say is 3.5% by the end of the year on the funds rate, up to 4% or a little bit more by the end of the year. I don't think that message was changed, Youssef, and you kind of alluded to that yesterday. We were previewing this. We know what Jay Powell said. We know what the policy statement said. We got a lot more details, and they're worth reading. But I don't think there are really any surprises in here.
What about UK? Because the CPI figures were in sharp contrast to what we're seeing in the US. I mean, heading in the wrong direction, if anything. What was your read on it? Well,
first of all, it wasn't a surprise. You follow the Bank of England very closely, so you can recall that Andrew Bailey, governor of the BOE at their last meeting, when they made their big 50 basis point rate hike, that they hiked up their outlook for inflation this year. 11% year over year is a lot, the most in 40 years, but I don't think it's a surprise. I think what it underscores today for us, this is a global inflation fight. And for the most part, most central banks are still looking at the upside for rate hikes, right? They're still trying to figure out how much more they have to do and how fast they have to go. At this point, seeing these inflation numbers, Bank of England is expected to do multiple 50 basis point rate hikes now. So this has been a big impact on them. But I think it's got a message for the bigger world. The inflation fight for most countries isn't over yet, and it's going to continue.
Kathleen, great analysis. Thank you very much for sharing some of those views. That's Kathleen Hayes in New York. I want to get to OPEC's new chief. He says oil markets are facing the high risk of a supply squeeze this year as demand remains resilient on the one hand and spare capacity begins to dwindle. Haytham El-Reyes spoke to my colleague Magnus Cranny in Vienna in his first interview since taking office.
I think we are running on thin ice, if I may use that term, because spare capacity is becoming scarce. And this is an issue. It's like an insurance policy. We don't want the oil markets to run on without insurance policy.
Manus is back from Vienna, joins us on the set again. So, Manus, what was the key thing that stood out to you here as you sat down with it?
I think it depends on how you see the spare capacity. He uses the phrase thin ice. And that depends on whether you think Iran comes back on board, whether the rest of OPEC can produce if there's a huge demand turn. But this, I think OPEC have delivered themselves what I would call maximum optionality, which is that small increase of 100,000 years, of the smallest since the 1980s, A, because they're struggling as a group to actually hit the levels of production that were agreed anyway. And secondly, and more importantly, maybe, given the debate that we have about China this morning from Goldman Sachs and Nomura, which is about the scale of the slowdown, he takes the other side of that trade.
What about getting to know him personally? And you spent, I think, a dinner as well with him. Tell me more about, how he sees his role and what his background has to do with it.
I think for him, it's about delivering unity, but unity with change. He's an OPEC Secretary General who has made it his mission. Before he did sort of the major sort of financial broadcasters like ourselves, he's already reached out to the African broadcasters, to the Arabic broadcasters. So he wants to create a broad church. Now, there's a later part of the interview. We'll hear some of it today. I would encourage people to go and listen to the rest of the interview because we talk about the relationship with the United States of America. It's not so much that you know, the Americans are open to becoming part of OPEC plus. You got the Russians in the middle of OPEC plus. The probability of America coming any closer, I think, is limited. But we do go on to have a conversation about the Russians coming to Vienna in December. We're all going to be back physically there. He is a very gracious gentleman. I would say he's a very precise, data-driven individual, because we sparred a little bit over the China perspective. He's bullish on China. He said it's beyond just oil demand. It's about product. It's about jet fuel. And he took the other side of the trade. I challenged him a little bit on that. And he's a good sport in that regard, in that you can have a constructive dialogue with this Secretary General about, he can take one side of the China trade and I take the other. He would say, don't use phrases like global recession. We are not there yet.
That's fantastic reporting. Thank you for highlighting some of the key points. The interview coming up, of course, later. Manus Cranny there. Let's check in on the first world headlines for you, get to some of the other stories we're following. And Julie Italia's those from Singapore. Jules.
Thanks, Yusuf. The US and Taiwan have started formal negotiations on a bilateral trade initiative. Washington says the first round of talks is set to take place early this fall. The move is likely to inflame already high tensions with China, which has launched military drills around Taiwan after House Speaker Nancy Pelosi's visit to the island. Goldman Sachs has downgraded its forecast for China's full-year GDP. The bank's economists now expect growth of 3% in 2022, down from 3.3%. That's following weaker-than-expected July data and recent energy supply issues. Goldman also cited rising COVID-19 cases and the unlikelihood of major new stimulus. It is the second time Goldman has cut its forecast for China GDP in about a month. A former top member of the 2020 Tokyo Olympics Organising Committee has been arrested on bribery allegations. Japanese prosecutors say Haruyuki Takashahi took nearly $380,000 from executives seeking favourable treatment for sponsorship and licensing contracts. The Games yielded $3.3 billion from sponsors by the time they kicked off in 2021. And Bloomberg has learned Apple is aiming to launch its latest iPhone line on September 7th in a virtual event. Other new products expected this season include new Macs, low-end and high-end iPads, and 3 Apple Watch models. New iPhones usually hit the shelves about a week and a half after they're unveiled. Apple has declined to comment on the event's timing. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Yusuf.
Thanks, Jules. Let's get you all a bit of a preview then of what else is to come up on the show. We're going to focus on Egypt as the central bank governor quits just hours before an interest rate decision. We have analysis from Credit Suisse's Ahmed Badr on that. But up next, the Fed made its signal and need to eventually dial back the pace of rate hikes. We'll discuss that with Lombard Odier's Sami Shar. This is Bloomberg.
VK ฟิล์มรถยนต์เกรดสูงกันน็อตสูงสุด 76%
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Cryptocurrencies have been very popular. And if a client came to you and said, look, I'd like some cryptocurrencies in my portfolio, what would you say?
Oh, we've actually been really deep into crypto, deep into learning about blockchain, and all of the new businesses. You know, I would characterize us as crypto learners. You know, we have made a series of toehold investments on behalf of our clients, both in some of the currency baskets as well as with some venture firms that are investing primarily in the crypto area. I think it has the potential to be completely game-changing, but it is still such the Wild West, and it's so uncertain. But it has the potential to completely upend everything.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Although we still have about 4 million people out of the pre-pandemic workforce, we continue to see strong employment gains and low unemployment rates, the kind of labor market that has historically pulled in more workers.
Fed Governor Michelle Baumann there on the labor market. U.S. futures are lower after those Fed minutes underscore the delicate balancing act of averting a slowdown while taming price increases. Meanwhile, new downgrades to China's growth outlook and tumbling jobs data in Australia are further dampening the mood in markets. I want to head out to Sami Shar. He's the chief economist at Lombard Odier. Sami, I mean, we're talking earlier with Kathleen Hayes about this, and it's the kind of report that if you want it to be dovish, it can be. If you want it to be hawkish, no problem.
There's indeed a bit of everything. Inflation remains front and center for the Fed. And it does seem to be too soon to talk about a pivot indeed. But there is a little bit of a shift in strategy to something more balanced, right? Which is not necessarily the idea of raising rates to an ever higher level until inflation goes to 2%. There is something like raising rates to a mildly restrictive territory and staying there, right? So the staying there is kind of the new addition to the Fed speech recently. And that would mean that, the Fed would raise rates to a level that, might not be too damaging. It's more the idea that they will not cut rates as soon as the market expects. But indeed, inflation remains front and center. But at least we are starting to see pieces of the puzzles coming together for an improved inflation outlook.
I mean, the statement also talks about the importance of continuing with the current approach to safeguard credibility with markets and make sure that inflation doesn't begin to, go the other way just when things are starting to get a little bit better. Is there going to be a necessity for the chair of the Fed to kind of push back on this market idea of a pivot because it's too early? Is Jackson Hole going to be that window where maybe it's going to be much more hawkish than would have been previously the case?
Well, where we need clarity is basically what the Fed does when inflation reaches 3-4%. It does seem that, again, between the slowdown in demand, the improvement in supply chains, in shipping, commodity prices, inventories, we are starting to have indications that inflation might go back to 3-4%. But to go below 3%, we need weakness in the labor market. And that was a bit the enigma that we also saw in the minutes. Why is the labor market so strong despite the weakness in demand? Which means that without labor market weakness, it's going to be difficult to achieve, inflation going back to 2 to 3%. 3-4% might be okay. 2 to 3%, you need weakness in the labor market, and we fail to see that currently. So Fed chair is certainly going to remind everyone that there is still a lot of work to do to get back to this 2 to 3% range, and not enough has been done.
I mean, part of the issue is that financial conditions are beginning to ease, which is counterintuitive given what the Fed would like to do. GTV Go for our clients, we have the Goldman Sachs Financial Conditions Index in there, and we compare that to the Euro Area Financial Conditions Index. You can see how both of them have kind of come off a little bit here. Just run me through whether you expect the Fed to make more use of some of the mortgage-backed securities of quantitative tightening, because that's actually run a little bit behind the program, right? They're meant to tighten a certain amount per month. It's meant to accelerate in September, but at the moment, we're actually not reaching those numbers. Could they look at that as a potential tool?
Absolutely, they might do more. They might sell MBS at some point. So that will, probably not be a significant change from the financial conditions that we see currently, but incrementally, it will get tighter. Now, there are financial conditions that are easing because of equities and bond yields being relatively contained. But some financial conditions in the real economy are actually pretty tight. Lending standards and bank loans, in our view, are about to roll over. And with an inverted yield curve, banks are about to lend much less to the real economy. So overall, with the Fed continuing its hiking process, maybe not to extremely high levels, but at least in the era of 3.5% to 4%, you will see higher rates, you will see tighter financial conditions. But again, it's perhaps the persistence of being at a certain level rather than continuing to hike that might make the difference.
The revised outlooks for economic momentum in China is getting a lot of interest with our global audience on the terminal. Nomura are now talking about 2.8% in 2022. Goldman Sachs has reduced it from 3.3% to 3%. What's the view at Lombard Odier? Has the downside now fully been captured in terms of the challenges the economy faces?
Well, we're still slightly above 3%, and really the debate here is if you give the benefit of the doubt or not to the authorities, right? This has been very clear in setting your working assumption around China is, do you believe that authorities are going to go more abruptly into supporting the economy or not? And considering that we had a surprise cut on the reverse repo early this week, it does show that we've hit breaking point here for the Chinese authorities, and we're in the camp that they are going to do more. Maybe not to achieve the kind of levels that they mentioned at the beginning of the year, that is totally out of reach. But nonetheless, they are going to do more to make sure that, first and foremost, they get a second half of the year that is much better than the first half. Second, that they outperform the U.S. economy. It does, this is important for Chinese authorities, that overall growth for China this year is better than U.S. growth. It might seem trivial, but it's probably actually a policy objective ahead of the 20th Congress of the Communist Party. So they are about to do more. They've reached breaking point, and it's clear that the second half of the year has to be, much better than what we've seen so far.
Sammy, all immensely valuable context. Really appreciate you weighing in on this. That's Sami Shah. He's the chief economist at Lombard Odier. We still have much more to come. This is Bloomberg.
บริการออกแบบและติดตั้งวิดีโอคอนเฟอเรนซ์โดยผู้เชี่ยวชาญ Smart Solution Computer.
You will shed light on dark matter. You will make aging optional. You will turn 5G up to 11. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, of the US, Europe and the UK, have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Ferro. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Get you some breaking lines hitting the Bloomberg. A red headline, this one from Mubadala. So a firm that they back is setting up a $10 billion fund for tech deals. They count Mubadala and Silver Lake as their investors. This is about G42, which is the company in question here. And they're going to focus on technology investments in emerging markets. It comes at an interesting time because we also saw data that shows that there's a lot more interest from Gulf states to buy U.S. treasuries given the oil windfall. And now with the windfall into some of these sovereign wealth funds like Mubadala, they're also going a little bit on the riskier part of the spectrum into some of these equity plays. But $10 billion then for tech deals. G42 set up by the state-controlled ADQ. So G42, ADQ are part of the business empire that is overseen by the United Arab Emirates National Security Advisor, and that is Sheikh Tahnoun bin Zayed. So we'll keep a close eye on this for you. I also want to give you the bigger picture view of Middle East equity markets, state of play for some of these indexes. We're getting into the last trading day of the week, including Saudi Arabia and Qatar. Quite a bit of upside coming through, 1.8% in Doha. A little bit more limited action in Abu Dhabi, but in Dubai, after the earnings from some of the Emaar holdings, you saw quite a bit of enthusiasm for some of the property plays. Egypt also saw strong gains, perhaps a little bit of a hedge of potential inflation problems with possibly an imminent devaluation. All these are things that investors are thinking about. Let's flip the board again and talk about Apple. Not so much about where they're diversifying their supply chains to. This is about their launch date, and it's actually shifting. If you're a loyal Apple fan, you'll know that it's usually right bang on the middle of September. This time we're looking at a launch for the iPhone series, the new 14. Is that where we're at? Yes, 14. It's going to come with your usual camera upgrades, a faster chip, so that is slated for September 7. And it's going to kick off a busy product season. We've got new Macs, low-end iPads, 3 Apple Watch models. I'm looking out for anything that measures blood glucose. Much more ahead. This is Bloomberg.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายการร้อนดีราคาถูก
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
No one covers the world like Bloomberg.
The says will get to 7% in the coming months. Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from?
We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
This is Bloomberg Daybreak Middle East. Our top stories this morning. The latest FOMC minutes show Fed officials seeing the need to slow rate hikes at some point. Many participants concerned about over-tightening. OPEC's new chief says that the oil markets are facing the high risk of a supply squeeze this year as demand remains resilient and spare production capacity dwindles.
I think we are running on thin ice, if I may use that term, because spare capacity is becoming scarce. And this is an issue. It's like an insurance policy. We don't want the oil markets to run on without insurance policy.
Egypt's central bank governor resigns in a shock decision just hours before an interest rate meeting with pressure mounting on the currency. And Bloomberg has learned that Apple is aiming to launch its latest iPhone line on September 7th in a virtual event. Let's circle back to the markets in Asia. Julia Tsali has all the updates from our Singapore studio. So, Jules, what's been shifting as far as you can tell?
Well, we are seeing upside here in Singapore today, Yusuf, but as you can see in the equity column, it is a down day, and this is really on the back of these downgrades we're getting about China's economy. The second downgrade from Goldman in about a month. They now expect 2022 growth for China around 3%, down from 3.3%, and we also had Nomura slashing their forecast from 3.3 to 2.8%. So all of these concerns about China's economy very much weighing in on the overall regional benchmark picture. You can see China CSI 300 on the lunch break down by about 0.9%, weakness too in Japan. We're watching moves though in the Aussie dollar. It is down about 0.2% against the greenback, while we're seeing yields spike there. This after yet another volatile jobs read down under. Now we're expecting a job gain of around 25,000 for the month of July. Instead, nearly 41,000 jobs were lost. A number of reasons for this, including COVID complications, people not being able to work if they have to quarantine or isolate, and excuse me, the floods that we are seeing in Australia too. But this really does just change the dial a little bit in terms of what we could see from the RBA's next interest rate hike. But overall, this downgrade coming through from China really weighing in on sentiment. We also had Pictet telling us earlier, Yusuf, they see 5-year GDP growth downgrade off by about 30 basis points from their earlier projections.
Jules, thank you very much. That is Julia Tsali there with some of the crucial moves in the markets in Asia. We'll get back to this part of the world and talk about Egypt's central bank governor. He's quit. A shock decision just hours before this afternoon's interest rate meeting, and with pressure mounting on the currency. No further details were given on Tarek Ahmed's resignation, and didn't say who would be the next governor. Let's get to Ahmed Bedr, Managing Director and Head of Media Equities at Credit Suisse. Ahmed, the optics of this are absolutely terrible. We are sitting on this morning together, and we don't have a central bank governor confirmed yet. That may happen later on. Let's start off with whether this is positive or negative for the currency adjustment story.
I think the key focus of the market now, regardless of who's going to come next, and I'm sure an announcement is going to come very soon, whether it's today, well, I hope it's today, simply because there is a rate decision today. But the most important thing is that, does his resignation signal a change in rate policy or not? That is the key question that we need to answer. Now, the market is expecting that maybe there's going to be a free exchange rate on the back of this. I'd say not necessarily. So we have to wait and see, unfortunately. But the way the market is viewing this is that this could be a signal of a free exchange rate, which, if you ask me my view, it has to happen, I think, sooner or later. But it's not necessarily the case. So I think we still have to wait and see.
We're seeing here the chart, GTV Go for our clients, the T-bill spread over emerging markets, and how that kind of has widened. I'm wondering, in a situation where they dig in their heels, because that is also a potential scenario, isn't it? That the evaluation doesn't come soon. I mean, how much time do they realistically have? Is that even tenable?
It's going to happen sooner or later, because currently what's happening now is more of like you're choking the economy, because there's absolutely no imports. If you actually look at key indicators, for example, like tourism is up, which is great, but remittances, which is the key source of foreign currency, is actually down. And the reason it's down is simply because of that reason, because of the exchange rate. Egyptian expats, simply, they're not going to transfer their money now because they think that's not the right exchange rate. So you actually, one of the key things that you need to do in order to free it up, basically to get those exchange rates, so to basically get back those inflows from expats.
I mean, the warning signs are everywhere, including the credit default swaps, which are at 1,300, which are above the
I don't think
levels.
we're going to see a credit event. So I don't think a credit event in Egypt is on the table, especially with the IMF, basically the discussions in place. And again, the first thing in the IMF's playbook is a free exchange rate, a devaluation. That's why I believe it's going to happen sooner or later. What I'm hoping for is not to keep choking the economy and delaying that decision. What we need is a 2016 scenario where you had a free exchange rate. Yes, you've got the risk of it shooting up a bit, but that's fine because it's going to normalize again. What you also need to get back is the carry trade. A lot of people think the carry trade is dead. I think actually if you restore the confidence, maybe it's going to be 2 years from now, but you can restore the carry trade.
Okay, so for those looking to execute on that kind of strategy, what is the time to get in back into some of these assets, be it bonds or equities? Is it after a 15% deval, 20% deval?
I think dollar bonds, the timing is whether it's now or when devaluation happens, it's not going to make a huge difference. The question is about the Egyptian treasury bills, so the Egyptian pound treasury bills. That's only going to happen when you have the devaluation happening at the right price. Again, our house view is 6 to 12 months of 22. Again, if you look at the market, they're expecting around 24, 24 and a half. Regardless, if you have an enough devaluation, or even let's have a free exchange rate, have it shoot up, let it normalize, that's going to be the timing when people are going to start coming into the carry trade, which Egypt definitely needs for short-term funding.
Let's put Egypt aside just for a minute, because I also want to get to some of the other calls, including Saudi Arabia. Your team had a chance to go through the Saudi Aramco numbers. Yep. No dividend. You know, we were talking about this earlier in the week, and we hypothesized there might be something, but there wasn't.
Listen, I think it was a surprise to the market, and that's why you've seen it from the stock price performance. It hasn't really gone up when the results came out. So the results were more or less priced in, although they're stellar results, right? How many companies can basically increase earnings by 90% year on year? Again, the dividend is going to be discussed by the end of this year, so potentially you could have something next year, but it's definitely, I don't want to say a shock to the market, but it was a little disappointment that there is no special dividend.
Is Aramco still the preferential play within
Absolutely.
the oil and gas complex?
Yes.
Is it the size? Is it
well, size is definitely one, liquidity, oil price, but also the deleveraging story. Because if you look at the balance sheet and the amount of deleveraging that keeps going on in Aramco makes it even more attractive.
What about another conviction view? I mean, apart from Saudi Aramco,
Saudi consumers. So again, whether it's healthcare or consumers, we've seen a lot of comeback stories there. So again, the consumer sector in general would be something that we'll be looking at the moment.
All right, we'll leave it there, Ahmed. Thank you very much for that. That is Ahmed Bedr. He's the managing director and head of MENA equities at Credit Suisse. We still have much more to come. This is Bloomberg.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
OPEC's new chief says that oil markets are facing the high risk of a supply squeeze this year as demand remains resilient and spare capacity dwindles. Haytham Al-Gay spoke to my colleague, Manus Krani, in Vienna, in his first interview since taking office.
It's all relative to the fundamentals we look at. And when we look at everything, the raw data that we have, whether we examine everything at a technical level, and then it gets raised to the ministers, and once they get into that room, all they look at is really these supply and demand fundamentals, economic indicators, supply data coming out from OPEC and non-OPEC, OPEC plus conformity figures, all of that plays into the element. But there was one element that I think is really important, which we hit on in our press release this time, and you may have noticed for the first time, the issue of spare capacity.
Yes.
And I think we are running on thin ice, if I may use that term, because spare capacity is becoming scarce. And this is an issue. It's like an insurance policy. We don't want the oil markets to run on without insurance policy. So that's the reason it was decided that do you go and take a risk and exhaust all that spare capacity that's available, which by all counts people are calling thin and scarce.
Well, how thin is the spare capacity? I mean, that's the number to the market. That's what matters. Your estimate?
Well, it depends on how you calculate it and what's the characteristics of defining spare capacity. So people have numbers between 2 and 3%, which is around 2 to 3 million barrels a day. Okay. But it depends if you include all member countries or not, if you include Iran and Venezuela or not. So, there are different assessments for it. But it is lower than historical standards, I would say. And that was, if I may, part of the reason why we decided that in view of the uncertainties, is it worthwhile exhausting that thin capacity? And we've been warning about this for a long time, to be honest with you.
Duty bound to ask, has there been an expression of disappointment from the United States, from the White House?
I can tell you, once we get into that room, there's always a lot of noise around the meeting room and before and after. But once we get into the room, like I said, it's all about the raw data.
There is the proposition that, OPEC is on autopilot, and we've never been in more volatile times, and you're having some of the shortest meetings in history. You're doing the market a disservice.
Well, some might argue the other way around and say that we are actually doing the market a service because we have a very transparent methodology. We've been implementing it very clearly and very visibly and transparently to everybody's knowledge. The parameters that we analyze are very clear. Everybody knows expected what the plan is, and it's good to plan out to the market the increments that were planned out since July last year. Well, so the market has an expectation of what to do.
Well, let's build on that. We're going to September. I want you to cast it forward. Is there a willingness to do more than 100,000 that you did at the beginning of August? Is the willingness growing?
Well, September 5th is when we will meet, and I think we've demonstrated time and time again over the past that we're willing to do whatever it takes to do what the market really requires. But I can't preempt and tell you from now what we will do, whether it will be an increase of more than 100 or not. It all depends on when we sit down and look at the market parameters again.
Let's go back to the noise. Do you think there's going to be more pressure from the US for you as a group to do more?
That I can't say. I mean, prices are coming off nicely for the interest of the U.S. or whoever wants prices to go down. So the noise depends on, I guess, what price levels are acceptable to whoever will make that noise. For us, the noise really doesn't make us make the decision. The noise we are used to. I think what really counts is when we sit down and we look at the numbers.
Russia was in that OPEC Plus meeting. Did they lobby hard against a more substantial increase? I mean, was this the most you could do without fracturing OPEC Plus?
I think we have demonstrated again that we've been very close with Russia in this alliance since 2017. The Russians have played a critical role in supporting the stability of the market. And the meeting, as you said, was very short and swift. So that's a sign that there was no division. The decision was taken by a clear, unanimous vote. And it was, I think, in 15 minutes we were done and dusted.
But that's part of the argument, isn't it, when we caught up with Sahil Mazrui, which was people are questioning that you're not proactive, you're not on the front foot, and you have this almost pacifist role at the moment?
Well, I mean, in July and August, we went beyond the agreed plan. Like you said, it was a step up of 432 increments. And in July and August, we decided to be more proactive and move to increasing by 650,000 for both months. So I guess that's a sign that we are willing to be more proactive when necessary. And it's not just a fixed plan. That's the beauty of our monthly meetings, is that we can see and analyze and regularly evaluate what we need to do.
I think the drama has been taken out of it. I'll come back to that in a moment. I want to focus on global demand. You've had a front row seat in China. You've marketed oil in China. You've been there. There is this palpable fear about a slowdown in China this week. I think that's what's driving markets right now. Given your understanding of the market, how do you see Chinese demand? How do you see Pan-Asian demand? How weak is that, Secretary General?
I think it's being blown out of proportion. In my view, I mean, if we take the data that came out before yesterday on China, and it's all perceptions and fears based on polls and expectations. So what's to say that the polls were right? The polls were saying that industrial production in China would hit 4.6% for July. The number came out, it was 3.8, but it was actually versus 3.9 in June.
But then I would say back to you, the credit impulse, the driver of growth in China is back at levels that we haven't seen in a couple of years. So I'll challenge you on that.
I think China is still a source of phenomenal growth. We haven't seen China open up exactly. There's a strict COVID zero policy. I think that will have an impact when China gets back to full steam. We're seeing additions of refining capacity in China, imports. I think also if you add to demand, it's not just China. You look at now the gas to liquid, gas to oil switching in Europe. This was highlighted even in the IEA report. Jet fuel recovery hasn't really picked up. So there are more elements to just China for the oil demand picture, and we are still bullish on oil demand for this year.
When China comes back, will it be fast and furious and then squeeze you even more?
Squeeze the market, maybe, not us. I mean, it's a global responsibility. It's not just on OPEC's shoulders, although many of our OPEC members are the major suppliers to China, Russia included. But I think it's a global responsibility. Again, it brings me back to the issue of investment and the importance of investment.
And in terms of that narrative of demand, I'll come back to investment in just a moment. The market is not just obsessed about China, but you look at a bailout of Uniper, a nationalization of EDF in France. We are on the doorstep of an energy crisis here, and sentiment is imploding. Give me your take. You've worked through a number of huge cycles. Does this look like, feel like, and can it become a major global recession?
I would warn against using a major global recession still. I think we're looking at growth levels, economic growth levels, GDP rates that are similar to historical levels for now. I think still, yes, you are right. We are on the signs of potentially an energy crisis. Coming winter, I don't know what it's going to look like. We're seeing utility bills going high, skyrocketing in Europe and in the UK, in Germany, and governments are acting to take that burden off consumers. And this, again, all boils down to the issue of investment. I think it's been investment, lack of investment, underinvestment, chronic underinvestment for several years is really what's taken us to where we are today.
The news, OPEC Secretary General Haytham al-Ghai speaking to Manus in Vienna yesterday. I want to get you a quick check on the oil prices because we're seeing Brent just offer a little bit of resilience here to the upside of about 1/10%. What stood out to me was some of the U.S. gasoline demand that hit the highest this year with the pump prices that are beginning to ease. So you're looking here for gasoline supplied, which is a proxy for consumption, rising about 9 million barrels per day. So according to the latest batch from the EIA, the increase in demand coincides with the longest streak of declines in U.S. pump prices since 2018. We still have much more to come on the program. This is Bloomberg.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
What is your base case for Italy in terms of what happens politically and then what the economic fallout is?
It is a big day for monetary policy across this region. Turkey joining Egypt in announcing its latest interest rate decision. Simone Foxman has details. So what exactly are economists looking at?
You know, Yusuf, not a single economist polled by Bloomberg believes we're going to see a rate hike today. Despite inflation at 79.6% year on year in July, no one believes we'll see a rate cut either, even though that has been the policy that the president has called for in the past. We'll see rates, real interest rates continue to go negative. We do believe as inflation has gone higher. You know, two other things we're looking for out of a statement from the central bank that will accompany this decision. One is the trajectory of inflation over the coming months, exactly when they see that easing. Has there been a change to their view that it will weaken by the end of the year? Also, we're going to look for essentially discussions of the effectiveness of some of the backdoor monetary policy tightening measures that they have gone on about to try and stabilize the currency, constrain credit growth. Economists really discussing whether or not Turkey will need to ultimately hike rates by the end of the year. An economist at SEB, Chief Emerging Markets Economist there, says that's still something he's penciling in by the end of the fourth quarter, but the timing is highly uncertain. One thing to note, President Erdogan has not called for a continued cuts to interest rates in several months. Actually, since June, does his change in rhetoric, does his silence there signal some sort of policy shift? Too soon to tell, probably, and economists don't believe we're going to hear anything like that today.
And then we also got the announcement yesterday that Israel and Turkey had resumed full diplomatic ties. What does that mean practically? What gets restored?
Well, tangibly, it means an exchange of ambassadors in each country. They haven't been, Israel hasn't sent an ambassador to Turkey and vice versa since 2018. But ultimately, the idea here is to boost tourism, to boost commerce. An Israeli official coming out yesterday and saying that trade between the two countries could easily grow to $25 billion per year. That's up from $6 to $8 billion, depending on whose estimates you credit there. At the end of last year. You know, this very much fits in line with Turkey's policy of trying to make friends with some recent enemies or frenemies in order to boost some of the foreign investment it's seeing in the country. We've seen that similar policy with Saudi Arabia, the UAE, and Egypt. I'll also note one interesting point that I saw when I was reading the Israeli press this morning. Turkey potentially wanting to benefit from some of the natural gas development perhaps that's happening in Israel. It's already the largest importer and has become so in the last couple of months of natural gas from Egypt. So we've seen a lot of development projects in Israel. This is something that would be important not just regionally, but also to Europe as it struggles to find new sources of natural gas.
And then Abu Dhabi's largest listed company says more emerging market investments are in the pipeline after a deal in Turkey last week. What are the details?
We know how close International Holding Company, the largest listed company in Abu Dhabi, is to the Abu Dhabi government. Its ties to the National Security Advisor there. So we understand, and this from an interview Farah al-Barawi did with the CEO, we understand that it wants to make more investments in emerging markets, particularly in the sectors of food, infrastructure, and healthcare, to the tune of $1 to $5 billion apiece. I'm going to target places like Indonesia, Colombia, India. You know, one of the questions I've been asking when I speak to government officials across this region, Yusuf, who have benefited somewhat from this run-up in energy prices is, do they feel responsible for other countries that are struggling under the inflation pressures of food and fuel? Do they see some need to go and invest more money to try and stabilize those economies, particularly in the MENA region? I wonder how much something like this might factor into an overall strategy. But at least the message here from the CEO of IHC is we see the potential for these investments to be more lucrative given depressed prices. So it's all about returns.
Yeah, a lot at stake there. Simone, thank you very much. Simone at the Qatar Financial Center in Doha. Speaking of lucrative, I want to talk about a lucrative contract. A lot of money. That's for LeBron James and the LA Lakers because they have agreed to a 2-year, $97.1 million contract extension. Also has a player option for a third season. That's according to ESPN. Now, makes him the greatest earner, doesn't make him the greatest player. That's going to be the big debate, and I'm going to defer to Greg Tanner on the outcome of that discussion. But in the meantime, that is, of course, a number that also has a 15% trade kicker. So talk about making progress with your renegotiations during your annual review. That's something I can also try and benchmark. From there, I take you to the equity story, a bit of a snapshot of where we're at as we reflect on the Fed minutes and look ahead perhaps to Jackson Hole in the longer term. On the S&P 500 mini, a little bit of a lack of conviction, just barely down here at 0.1%. UBS says, look, this talk of a policy pivot from the Fed is way too premature. Don't chase this rally. In bonds, we're seeing US 10s just creep back up, closer and closer to the 2.9% handle. Much more ahead. This is Bloomberg.
บริการออกแบบและติดตั้งวิดีโอคอนเฟอเรนซ์โดยผู้เชี่ยวชาญ Smart Solution Computer
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists. Because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
This is Bloomberg Daybreak Europe. I'm Danny Berger in London alongside Manish Kraney in Dubai. And these are the stories that set your agenda.
Fed Hedge minutes show the FOMC saw the need to eventually slow the rate hikes, but also noted risks of tightening too far or inflation becoming entrenched. China downgrades Goldman Sachs and Nomura cut the GDP forecasts, warning a power crunch and COVID lockdowns could weigh on demand. The combination spells risk off. Fed angst plus China sour sentiment, sending Asian stocks and US futures lower, treasuries and the dollar climb. Danny, a very good morning. A massive miscalculation. No, I didn't realize the flight didn't get back in until 12:30 this morning. Not much sleep, so it's up to you. Good morning.
Good morning, Mans. I truly thought you were going to say a miscalculation of bond yields or stocks or something, but yes, sleep is more important. But Mans, there was a bit of a rethink, I have to say, in yesterday's market session, starting out pretty negative after getting earnings from some of the retailers that disappointed. Let me take you into these markets. Some of the worst of it was paired a bit after those FOMC minutes, which continue to kind of take the same tone that Jay Powell did after the press conference, where he did talk about slowing down the pace of rate hikes, seeing what effect they have. So you're looking at an MSCI Asia Pacific session down 0.6%, some concern about China Eco. European stocks, those are down up this morning in the futures session, 0.2%. Ray Dalio trimming the short bet they had against Europe. Bridgewater, of course, pretty significantly. It was some 10 billion, now in the 800 millions. Now we're looking at FTSE 100 futures, those also up the same amount. Some double-digit inflation numbers in the UK yesterday, which served to shake markets. And finally, S&P 500 futures, those are down 0.1%, Manus.
Yeah, it's hardly a shakedown. I think the one line that stands out in the minutes is many saw the risk of over-tightening Fed policy. Go and listen to Paul Volcker and Ray Dalio on my LinkedIn account. That is a conversation worth listening to about what central bankers need to do to galvanize and get a hold of inflation. Now, the short end of the curve drops. You got 2 years trimming the surge. And I think, do you believe that the pivoteers have been emboldened, that the Fed would blink, there could be a pivot on the way? Or is it just that the Fed wants maximum optionality? And I think it's the latter rather than the former. You look at NYMEX crude flat at the moment. Again, the downgrades to China demand certainly being pushed back against by the crude market, very much in line with Secretary General Haytham El-Ghais, as he said to me yesterday. He doesn't believe we're in the eyes of a global recession. He thinks that China demand is stronger perhaps than we're all paying for. The dollar behaves as a risk-off asset, not as a yield differential. Standard chart is line from last week, and that is what the dollar is doing this morning, going slightly better bid. And Euro Swiss, I just thought we'd genuflect to BNP Paribas. They're with us this morning. They initiate a short on Euro Swiss on a Eurozone downgraded risk trajectory. That's how you want to play the slowdown if and when it comes in substance in Europe. Let's get to the team around the world. Michelle Jamrisco, she's in Singapore, wrapping up those Fed minutes. Dovershaw Hawkish, Charlie Wells is in London, covering the US retail sales data. Bruce Einhorn, as ever, with the political intrepidation in Taiwan. Danny.
We've also got Juliette Sally in Singapore on all things markets. And our deals reporter, Manuel Bigori, is taking a look at Bridgewater unwinding its big short on European stocks. Now let's start with the Fed, Manus. Minutes from the Federal Reserve's July meeting have revealed concerns that the central bank may need to start cooling off rate hikes, even as it made clear that it still needs to push further into restrictive territory. For more, let's bring in Bloomberg senior Asia economy reporter Michelle Jamrusco. Michelle, how much can we take away from this, given that after the Fed's meeting, we had, a host of Fed speakers come out and say, okay, we still need to move further. We still need to get more restrictive.
Yeah, that's right, Danny. There isn't a whole lot that's entirely new here, but hopefully enough drama to keep Manus awake this morning. It really does underscore the complications that the Fed has right now. I mean, as you said, they did emphasize the slowing of the rate hike pace going forward. They did not really provide any more new detail on when that might be. Of course, they're weighing a lot of data in the meantime. But then they also talked a little bit about the possibility of overdoing the rate hikes and the need to kind of follow how these hikes have percolated through through the economy. Now let's remember, and they cited this in the minutes, that monetary policy works with a long and variable lag. So we only just started this rate hike cycle in March. That was at, as we remember, a quarter point on the upper bound. Now we're at 2.5%, and we're set to go further with investors looking at potentially a third straight 75 basis point hike in September. So, there's a lot at odds here, but they did, as I would point out, they did mention they didn't want to overdo the pace of rate hikes. They also were concerned, as you mentioned, that elevated inflation could become entrenched and that the public could start to question the committee's resolve. And of course, that's what they don't want to get into. They've been pushing back on. They've been trying to tell markets our inflation fight is far from over.
Yeah, and if you look at the financial conditions, and we'll look at those in just a moment, Michelle, they're certainly not emboldening the let's blink now or pivot mode. Michelle, good to have you with us. Michelle Jamrisco there on the Fed Minutes. So you've had better than expected earnings from large US retailers, putting a positive spin on stocks ranging from Walmart to Home Depot. But can consumers keep the momentum going? That is the question. Charlie Wells is with us. Charlie, the question is, are we digging into savings? Are we paying on credit cards? What's your first take in terms of the momentum for this to continue?
Look, it was supposed to be such a bloodbath, right? We had that dire profit warning from Walmart in July. And actually, Walmart ended up beating a lot of these expectations. Sales were up to $153 billion. The estimate had been $151 billion. If you look at Home Depot, there were a lot of concerns that the U.S. housing market is slowing down, and that would spill over into this retailer. But actually, they had record earnings. They had record sales. And so what it seems like is, despite some of these headwinds, despite that inflation, despite the supply chain issues that we've been hearing about for so long, and even some of these inventory issues, retailers are able to navigate some of these challenges and pass some of those costs on to consumers.
Okay, we have to talk about Bed Bath & Beyond as well, because yes, it is a consumer name, but I mean, it's a meme stock, totally different stuff going on there. What is the latest with them? What's going on?
Right, so Bed Bath & Beyond had been having a pretty good few weeks, right? Up about 400% from lows in July. But yesterday, Ryan Cohen's RC Ventures filed some paperwork with the SEC indicating that they might sell about 8 million shares. And now this shows that Ryan Cohen may have actually had enough with Bed Bath & Beyond. There have been issues with management, the CEO stepping down in June, and that retailer has really struggled with sales. They have struggled to sort of meet the expectations that were set with this turnaround effort that's been going since Bed Bath & Beyond really became a meme favorite. So we saw that stock in post-market trading down about 21%. So sort of the opposite story there.
All right, Charlie, thanks so much. From the normal stories to the off the beaten path stories, Charlie Wells there from our Bloomberg team. Now, the U.S. and Taiwan have started formal negotiations on a bilateral trade initiative to deepen economic ties. It's a move likely to inflame already high tensions with China. Joining us now is Bloomberg's Bruce Einhorn. So, Bruce, what do we know about the trade talks and of course, what this might mean for the U.S.-China relations?
Yeah.
Well, I think, Danny, that's something that a lot of people are wondering about, of course, following Nancy Pelosi's visit to Taiwan and China's response with military exercises that went on for quite a while. I think this is different in that this is an agreement to negotiate that the U.S. and Taiwan first announced several months ago. And so now we're just getting some more details saying that talks will begin sometime early in the fall. Where these go, I think, is a big question, because on the one hand, there's really strong bipartisan support for Taiwan in the U.S. Congress. On the other hand, there's really not strong bipartisan support for any sort of trade deals in the U.S. Congress. So what comes out of this, it remains to be seen. It may be that there's not a whole lot of substance here. The other thing to keep in mind, though, is that there's another thing out there that China might get very upset about also later in the fall. The chairman of the Senate Foreign Relations Committee, New Jersey Senator Bob Menendez, has a bill that he's co-sponsoring with South Carolina Republican Lindsey Graham that would upgrade U.S. relations with Taiwan, designate Taiwan as a major non-NATO ally, also allocate several $billions in security assistance. That's something that's also scheduled to start, the markup on that, the work on that is supposed to start in the fall. That's something that China could potentially get much more upset about than this negotiation over trade.
Bruce, thank you very much. Bruce Einhorn there with the very latest twist and turn between the US and Taiwan and China, that trifecta. A dim Chinese economic outlook. It's souring the mood overall in Asia. It hasn't really dented the oil markets. Juliet Sally has the skew from Goldman Sachs and Nomura. I bet you they've got their short positions on before they release the note. What do you reckon?
Hey, Manas. Well, certainly we are seeing Asian stocks at least on track for their first weekly loss in around 5. But yeah, as if China's economy wasn't facing enough headwinds, you've now got the power supply crunch, and that has forced Goldman Sachs to lower their 2022 growth outlook for China to 3%, down from 3.3%. And that's their second downgrade in around a month. Nomura also downgrading, as you say, they're down to 2.8 from 3.3%. As my chart shows, economists keep slashing their growth projections, and we've now got an average of around 3.9% when it comes to projections for China's economy. Pictet Wealth Management telling us that they've downgraded their 5-year growth forecast an average of 30 basis points. So all of this just adding to the complications for China's economic outlook. Let's flip the board because there was another shock jobs report too coming through in Australia. We're expecting 25,000 jobs added in July. Instead, nearly 41,000 were lost. The participation rate also lowering due to COVID complications, the floods and school holidays. And this, Danny, complicating the outlook for the RBA too. What does this mean in terms of how they're going to hike, whether they'll be aggressive, because you did see that sharp downturn in jobs numbers for the month of July, but the unemployment rate now at a 48-year low of 3.4%. Danny.
Jules, thanks so much. Bloomberg Juliet Sally there in Singapore. Now turning to Europe, where Bridgewater Associates has unwound most of its huge short wagers against European stocks. Now the world's biggest hedge fund has cut its disclosed short position to $845 million. That was from as much as $10.5 billion in June. Joining us now is Bloomberg's Manuel Baigori. So Manuel, Bridgewater cutting its disclosed short positions. Do we have any idea of why they would have made such a move?
Hey, Danny, that's a great point. I mean, we've gone through regulatory filings in order to compile these data, and it's still unclear whether Bridgewater was meant to profit from any declines or they were trying to hedge any other parts of their portfolio. And also, we need to bear in mind that the positions could be bigger because they are not forced to disclose all of them, only those major positions. So it's still unclear. We're still exploring that avenue, but definitely a dramatic drop in short wagers in European stocks.
Okay, Manuel, well, the stock's 50 up 11%. All these markets had that July boon, and the question is whether they were part of a short squeeze or maybe ramping off some of the cross-asset portfolios. Dig deeper, because we know you can. Manuel Baigori there with the team tracking what Bridgewater's positions are. Let's get into some of the things that you need to have on your agenda for the day. 9 a.m. UK time, we're going to get Norway's rate decision. Economists see the central bank lifting the key rate by 50 basis points to 1.75%. Get yourself a little bit of breakfast and settle in. 1:30 p.m. UK time, we get the initial jobless claims and the Philly Fed business outlook, Danny. So Michigan, Philadelphia, all those softer data come to play.
Yeah, certainly. And our guest coming up does say that this market is getting more data dependent. Another thing to add to your data agenda, U.S. July existing home sales, they'll be at 3 p.m. UK time. And finally, some Fed speakers. You have Esther George and Neil Kashkari. They're speaking at separate events about the economic outlook. But first, coming up on the show with Manis and me, the Fed will dial back on rate hikes eventually. At least that's what the latest FOMC minute showed. We're going to discuss that and get the latest moves with our next guest from BNP Paribas.
Plus, OPEC's new chief says the oil markets are facing the high risk of a supply squeeze this year as demand remains resilient and spare production capacity dwindles. We're on thin ice. We'll hear from him later in the show. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one, and through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the US shaped the 20th.
Although we still have about 4 million people out of the pre-pandemic workforce, we continue to see strong employment gains and low unemployment rates, the kind of labor market that has historically pulled in more workers.
Fed Governor Michelle Bowman there on the labor market. And U.S. futures still lower after those Fed minutes, of course, pairing some of the losses that we had seen during the start of the U.S. session yesterday. But all of this underscores the delicate balancing act of averting a slowdown while taming price increases. Joining us now is Alexander Yekov, FX strategist at BNP Paribas Markets 360. Alexander, good morning to you. Thanks for joining us. So dollar really feels like we're in these summer lulls, not moving too much after we get those Fed minutes, seem to be around the same tone, that perhaps more dovish tone even from Jay Powell over the press conference. But are you willing to take any bets of directionality on this greenback heading into Jackson Hole?
Good morning, and thank you for having me on again. I think the Fed minutes last night very much revealed that the Fed are going to take a more balanced approach going forward, and that's also our take. So we think the Fed will hike rates by another 100 basis points this year, but we don't necessarily think that that will feed through to the dollar in a meaningfully positive way. Why do I say that? Because we're already at the point of peak hawkishness for the Fed, and that's what really matters for the dollar. Absent a rise in the terminal rate, which is the thing that the dollar really cares about, we don't think the Fed will be hawkish enough to keep the dollar keep the dollar stable. And so our view is that peak hawkishness for the Fed is going to drive the dollar lower, especially versus some of the higher beta currencies. What we like to be allocated is Aussie, NOK, and some of the commodity sensitive emerging market currencies.
Alexander, good to have you with us this morning. So that's a gutsy old call, given that Goldman Sachs and Nomura are literally ripping their China growth forecast to shreds. And yet you want to put in front of me, I want to be long Aussie, NOK, CAD, high beta, high China correlation coefficient currencies. Defend yourself, Alexander.
Absolutely. Look, I think the China activity data slowdown is a key risk to our high beta view. But ultimately, when we look at our models, what's really driving these currencies is monetary policy domestically and what the Fed is doing. And we think we'll be in a situation where the Fed has reached peak hawkishness, and monetary policy domestically in these high beta economies will continue to get tighter. Take Norway, for example. We have the Norges Bank coming up this morning. As you were highlighting, they'll raise rates most likely by 50 basis points. Now, the story, in addition to the tightening that the Norges Bank are going to deliver, is very good in Norway, where it puts you on the right side of a lot of things to be long NOK. It's a current account surplus economy. It's an energy exporter, and it has an improving flow story. So that's one of the places we like to be allocated, and we like to be long NOK, especially versus Czech and Zloty.
I know you're also long Aussie versus sterling. I know you recommended the sterling short to start this month. Looking at yesterday's inflation data in the UK, 10.1%. We get to double digits above expectations. Does that change at all your sterling outlook? Do you want to add to those shorts? Do you want to pare them back?
I think what's interesting from yesterday's inflation data is that sterling failed to benefit significantly from higher inflation. And I think it's because the growth outlook in the UK is not favorable, as you've highlighted before on the show. But in addition to that, negative real rates, or rather depressed real rates in the UK, make funding the current account deficit via portfolio inflows quite challenging. And that type of setup usually doesn't bode well for a currency. Now, the reason that we think tactical risk reward is improving to be getting short sterling is that positioning has squeezed recently when we look at our models. And so, as you say, the way that we like to express that view is to be short sterling versus long the Australian dollar.
The one word which I'm always loath to use is doom loop, but sterling looks as if it's on the edge of a much bigger and more significant repricing to the downside, given the toxic outlook for it. So is the market skewed to the downside and prepared for a material reevaluation of sterling on the crosses and on the outright?
We think it was a few months ago, but it no longer is, especially not in spot markets, because on our positioning analysis that we published at BNP Paribas, what we've seen is extreme sterling shorts 2 months ago have almost fully been squeezed out of the market. And that reflects a broad range of investor types captured by the analysis. So I think the market is less bearish now than it was before. And like I said, that makes the tactical risk reward to be getting short the pound much more attractive.
Alexander, just a very quick one for you because we're almost out of time here. You're starting to get a bit more bearish on Europe. Makes sense given some of the energy crisis there. How are you expressing that, and how long do you want to put a short euro position on?
I think the best way to express the bearish Eurozone growth outlook is via short Euro Swiss. Euro Swiss is the cross that correlates best to, for example, activity data in Germany or the curve in the Eurozone. In other words, it's the best proxy for Eurozone growth expectations. But in addition to that, the hawkish S&B pivot that we saw a few months ago is a real game changer, we think, for the currency. And so this trend decline that we've observed in Euro Swiss recently, we think can continue, and we hold the trade looking for 96, but I think it can also fall beneath that level.
Alexander, I'll give you this. You hold the line. You will not be moved, but then that's the difference between a floppy commodity trader and the hard face of FX. So we'll leave it with you. Alexander Jekov, FX strategy at BNP Paribas Markets 360. Now there'll be a bust up between the FX rates and equity traders over there. Coming up on the show, we're going to get a roundup of all the top stories right here on Bloomberg this Thursday morning.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายการล้อดีราคาถูก
You will shed light on dark matter. You will make aging optional. You will turn 5G up to 11. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
How much of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan's society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
It's Daybreak Europe. I'm Manus Cranny in Dubai. Danny Berger alongside me in London. Let's get the first word news. Back to Singapore. Juliet Sally has the roundup.
Manus, global oil markets face a high risk of a supply squeeze this year. That's according to the new Secretary General of OPEC, Haytham Al-Ghaz. He says demand remaining resilient, adding that fears of slowing consumption in China have been exaggerated. He's also concerned about supply issues.
I think we are running on thin ice, if I may use that term, because spare capacity is becoming scarce, and this is an issue. It's like an insurance policy. We don't want the oil markets to run on without insurance policy.
Egypt's central bank governor resigned yesterday, just a day before an interest rate meeting. According to state-run media, Tariq Amar was appointed advisor to the president, but no further details were given on the resignation. And it wasn't announced who would take over as the next governor. In the UK, the next Prime Minister faces a worsening fiscal outlook, and that raises questions about the viability of big tax cuts being promised by the two candidates vying for the top job. That's according to the Institute for Fiscal Studies, which says it's hard to square their promises with managing the nation's finances responsibly due to the fact that neither has pledged spending cuts to finance the giveaways. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Danny.
Juliet Sally in Singapore. Thanks so much. Manus, I'm looking at two-year yields this morning falling by nearly 2 basis points. It's been a roller coaster ride at one point, climbing 2.7 basis points. Of course, that expectation for 75 worth of hikes, that started to back off after the FOMC.
Yeah, but if they blinked now, just think of all the language, the work that they've done to back up the truck. There's a lovely story on PIMCO this morning. They're looking for higher yields, Danny, of where they can step in. The Aussie pension fund licking their lips, higher yields, getting ready for a recession, aren't they? There's the yields this morning, down ever so slightly on twos. We're going to talk Fed and hikes.
สตาร์ทเลยด้วยสกอตคิดที่มีไทโรซีนดื่ม
that right?
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Recently, cryptocurrencies have been very popular. And if a client came to you and said, look, I'd like some cryptocurrencies in my portfolio, what would you say?
Oh, we've actually been really deep into crypto, deep into learning about blockchain, and all of the new businesses. You know, I would characterize this as crypto learners. You know, we have made a series of toehold investments on behalf of our clients, both in some of the currency baskets as well as with some venture firms that are investing primarily in the crypto area. I think it has the potential to be completely game-changing, but it is still such the Wild West, and so it's so uncertain. But there's it has the potential to completely upend everything.
Ken Griffin is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
It's Daybreak Europe. I'm Anna Scranny in Dubai with Danny Berger in London with the stories that set your agenda.
Fed hedge minutes showed the FOMC saw the need to eventually slow rate hikes, but also noted risks of tightening too far or inflation becoming entrenched. China downgrades. Goldman Sachs and Nomura cut their GDP forecast, warning of a power crunch and COVID lockdowns that could weigh on demand. The combination spells risk off. Fed angst plus China sour sentiment, sending Asia stocks and U.S. futures lower. Treasuries and the dollar climb. Manis, you're back in Dubai after a fantastic interview with the new OPEC Secretary General. I mean, oil so fascinating, encapsulates all the risks we're seeing in this market, including those warnings about China from Goldman and Nomura.
Well, it's interesting that the oil market has sort of battered away those warnings from Goldman's and Nomura this morning. Oil's up at up 0.2% on WTI and on Brent. And that leans into what Secretary General had to say to me yesterday in terms of China will come back. It is strong. It is beyond just oil. There's more jet fuel. There's more demand. It's reflected in the cross-asset allocation this morning. NYMEX is up 0.2%. So the people who deliver oil to China believe in the story, believe in the narrative. We're overhyped on global recession, according to Secretary General. Crude, as you can see, 88.25, twos rollover as the magic words from the Fed minutes, which were weeks ago, is that they could trim back at some point. But the other key line there is many saw the risk of over-tightening policy. That febrility is something the bond market will prey upon. The dollar is a little bit better bid as we go into slightly risk-off mode rather than rates differential trading mode. And Euro Swiss is BNP Paribas preferred short on the risk of a slowdown in Europe. Danny.
Well, Manis, we're starting to see some of that sour sentiment play through Asia stocks. They're not down that much. You are seeing China lead the risk-off mood within your Asia stocks, if I can find my words. CSI 300, that's down 0.9%. MSCI Asia Pacific, just 0.4%. You continue to see Europe move higher, bouncing back after yesterday's losses. That, of course, coincides with Bridgewater's Ray Dalio relinquishing the bulk of their short bets. They did have some $10 billion on. Now it's in the $800 million worth. FTSE 100, that also climbing this morning after a UK inflation figure surpassing 10%. That certainly set bond markets on fire, not just in the UK, but globally. I mean, how often do you see gilts leading that move? Finally, S&P 500 futures, those slightly weaker, Manis. Again, putting into all of that, the FOMC, some earnings, unable to get past that 200-day moving average. Is the bear market rally finally over?
Well, we'll debate that probably after the next Fed meeting. That could perhaps prig that bullishness. The minutes, Danny, the Federal Reserve's July meeting, they've revealed concerns that the central bank may need to start cooling off on rate hikes, even as it made clear that it still needs to push further into restrictive territory. Ultimately, the officials agreed on the need to eventually dial back the pace of rate hikes while monitoring the effects of tightening, many of whom saw risk of over-tightening policy. Let's take that narrative to Silvia Dall'Angelo, senior economist at Federated Hermes. So, you know, the deeply dovish people out there who are desperate for a pivot from the Fed will lean into these minutes and go, this is a pivot moment for the Fed. But we put it to you that financial conditions are just too loose. They've not finished their job yet at the Fed. FCON are loose, and this, if anything, will embolden the hawks at Jackson Hole. Would you agree?
Well, basically, I didn't interpret the Fed minutes last night as being that dovish. As you said, inflation is still the main concern for the Fed. And I think that also the risk management discussion was a bit more complex than generally reported. So, of course, the Fed saw some risks of over-tightening, let's say, but equally, they said that there are some risks of inflation becoming entrenched, and so implicitly there are some risks of doing too little in terms of monetary policy tightening. The other thing that I would really stress is that the Fed is really data dependent, so there is a risk of reading too much in the minutes that at the end of the day are backward-looking. And really what the Fed will do in the next 2 months will depend on data on inflation expectations, and the labor market. So far, data suggests that the Fed will need to do more in the next few months.
Is that the tone you expect them to strike during Jackson Hole, Sylvia? Will we get a Fed that really tries to combat any notion of dovishness?
Yes, that's my expectation. And also, I mean, as you said, financial conditions have eased since, say, their peak in June, and they are quite accommodative based on also the recent price action in equities, and that's something that goes against what the Fed needs in order to bring inflation back to target. And so I think that they will try to correct the message a bit. Well, specifically, Chair Powell in his speech will likely correct the message a